May everyone please be seated so that we can begin the event. Good morning and a warm welcome to the Muscat Stock Exchange Investor Roadshow, the biggest event of Imad's newly rebranded stock exchange. Before we dive into our stimulating agenda, I'd like to thank the Muscat Stock Exchange for organizing this gathering and to you all for joining us for what I am confident will be a landmark event. My name is Hawra Al-Balushi and I'll be your host for today. We begin our series of presentations with a leader in the oil and gas services, Abraj Energy Services. Before we go any further, I ask you to please refer to the detailed disclaimer on this slide. As you may be aware, Abraj is one of the potential Muscat Stock Exchange IPO candidates. However, please note that the company with its advisors are still in the early stages of IPO preparations. In light of this, Abraj is restricted in the information it can disclose at this stage and will not be able to take any questions today. And now it's my pleasure to introduce to you Abraj Energy Services. Please enjoy this short video showcasing the company's strong corporate track record.
نحن أبراج. تعد شركة أبراج إحدى الشركات الرائدة في خدمات النفط والغاز في سلطنة عمان، ويعود ذلك لموقعها الاستراتيجي الواقع وسط كبرى أسواق قطاع الطاقة. وتماشياً مع رؤيتنا، فإننا نقدم أفضل الخدمات لأبرز مشغلي قطاع النفط والغاز في المنطقة. نحن ملتزمون بالجودة. نحن في أبراج نعمل على تقديم خدمات الحفر والصيانة اللازمة، وذلك بهدف تعزيز الإنتاج والمساهمة في الارتقاء بسلسلة القيمة لقطاع الطاقة. ويعود الفضل في ذلك إلى أسطول أجهزتنا وتقنياتنا المبتكرة في الحفر للنفط والغاز. نحن نتغلب على التحديات بكفاءاتنا من خلال موظفينا الذين يتمتعون بدرجة عالية من الكفاءة وبقيادة فريق إداري متمرس. نحن ملتزمين بإيجاد الحلول اللازمة التي تلبي الاحتياجات الحالية والمستقبلية لعملائنا، بالإضافة إلى إيجاد سبل تجعل خدمات قطاع النفط والغاز صديقة للبيئة. نحن نهتم بصحتكم، كما أننا نسعى للالتزام بأعلى معايير الصحة والسلامة والوعي البيئي في عملياتنا التشغيلية. نحن ننمو مع عمان. إننا ندعم قطاع الطاقة المزدهر في السلطنة ونساهم في بناء مستقبل أكثر إشراقاً لعمان. نحن الشريك الموثوق لشركات النفط والغاز في المنطقة. نحن أبراج.
I hope that everyone enjoyed that video. To take you through Abraj's rich corporate history, I'd like to introduce Mr. Saif Al-Hamhami, Abraj's newly appointed Chief Executive Officer who brings over 20 years of industry experience to the role. Mr. Al-Hamhami is a seasoned professional with expertise in business development, bottom line cost optimization, and complex organizational efficiency. He also boasts a successful track record in change and workforce management. Accompanying Mr. Al-Hamhami is Mr. Salah Al-Harthi. Mr. Al-Harthi's professional background spans over 2 decades, having worked with leading regional and international oil and gas companies, and brings with him expertise, technical knowledge in the field. Mr. Al-Harthi has been instrumental in Abraj's journey thus far, having joined in 2011 and establishing in his tenure the company's growth plans as well as a series of new service lines. I now welcome Mr. Al-Hamhami to the podium to take you through Abraj's key strongholds. Thank you.
Thank you, Hawra. Assalamu alaikum. Ladies and gentlemen, it's an honor to present to you today Abraj Energy Services in this event. Can I move this, or can you go to the next slide, please? Okay. So, Abraj is a leading oil field services provider with a remarkable success story. It is established on a strong foundation, and it has the ambition and capability to further grow. Abraj is an agile, high-growth oilfield services company in the Sultanate of Oman with a leading market share in the country. At Abraj, we pride ourselves for the excellence and capability of our people of over 2,500 employees and exceeding over 90% Omanization level. Our financial performance is robust. In 2021, we have achieved revenues of over $320 million and earnings of over $120 million. We are a responsible company to the environment, to the people, and the community, with a strong health, safety, and environmental standards. Our customer base is made up of diverse and renowned players in the energy sector. We have long-term contracts, some spanning up to 10 years, and a backlog of over $1.8 billion. Abraj business is supported by Oman's and the region's strong market fundamentals. Oman's energy market has demonstrated stability during the global uncertainty. The country has proven its ability to continue to develop and increase its hydrocarbon production. As you can see, Oman's hydrocarbon production has increased by over 40% between 2010 and 2020. The country's hydrocarbon exploration and production landscape sees around 30% of the production operated by large international companies such as Shell, BP, and Occidental. The annual spend on oil and gas in the country is over $10 billion, and that is expected to increase by another 20% in the next 2 years. Drilling and well services, that is where Abraj is currently positioned, accounts for around 26% of that expenditure. Furthermore, forecast shows an expected annual growth of 9% in well services activities in the next 5 years in the region. So in conclusion, the diversified, growing, and resilient expenditure base of Oman's oil and gas service industry provides a strong support for Abraj to thrive and to continue to grow. As you can see in this slide, Abraj has delivered consistent growth across key financial indicators. We delivered 11% revenue growth and 21% growth in earnings in the last 3 years, despite the pandemic. The success of the company has enabled paying consistent dividends for the last 11 years. Abraj has succeeded in both the operational and the financial fronts. In conclusion, Abraj is a robust company with an outstanding growth track record, attractive positive financials, and a leading local market share. We have the ambition and capability to continue our growth and success journey. With that, I will hand over to my colleague, Mr. Salah Al-Harthi, our Business Development Director, to take you through our operating and business model in more detail. Thank you.
Thank you, Saif. Good morning. Thank you for being here today with us. It is my great pleasure to present the company's many achievements to such a distinguished audience. Let me begin by providing some insight around our best-in-class operating model and the wide range of oil services that we provide. We have a wide portfolio of services that our clients enjoy and benefit from our expertise, such as in drilling, workover, fracturing, cementing, and coiled tubing. We have the largest drilling fleet in the country with 25 units that are modern and the youngest in the region. This fleet is boasting 96% capacity utilization, and the 5 workover units boast around 100% capacity utilization. This is remarkable in our industry. In the fracturing space, we have invested heavily in these services. With 35,000 horsepower capacity, we became the first MENA-based company to launch integrated fracturing services and pioneer the development of unconventional deep tight gas, while championing the oil frac in the matured fields. Our cementing capabilities are of similar stature. Abraj is the largest Omani cementing company, servicing multi-clients and obtaining the largest laboratory in the country. We take a lot of pride in our in-house R&D capabilities, as we have developed a few cementing technology systems. Abraj is also an established coiled tubing player, providing cost-effective solutions to our customer. In addition, we have mastered all types of coiled tubing applications, such as clean out in deep tight gas wells, clean out in multilateral, horizontal, and so on and so forth. This was an overview of the services that we have provided. However, let me get deeper into our largest segment, the drilling services. As I've mentioned, we have 25 drilling units that has an average age of 7.6 years, while the 5 workover units has an average age of 11.4 years. We have a diverse fleet across the board, ranging from 550 horsepower all the way to 2,000 horsepower, which makes us the go-to drilling company in the country. Our expertise across all, we are expert in all kinds of well drilling, such as high pressure, high temperature, deep, tight gas, oil, horizontal, multilateral, to name a few. More than 80% of our fleet are fast-moving and equipped with the latest automation, which means we can drill faster and safer for our customers. Abraj is a proven leader in providing agile and efficient drilling services, which remains our largest business segment. Our state-of-the-art fleet, coupled with the best-in-class operational excellence, makes us the largest, or afforded us the largest market share in the country, with almost 30%. This successful track record is attributed to 3 factors: strong and experienced management and board, dedicated staff and training capabilities, and sustainable HSEQ-focused culture. Our management team possesses strong capabilities with balanced international and regional experience. And they have deep understanding of the market. Several of our members have been with Abraj since inception. Abraj management bring wealth of experience to the company with an average of almost 24 years across the board. And having worked with internationally recognized oil and gas players such as Shell, Schlumberger, KCA Deutag, to name a few. At the same time, we have a diverse and experienced board of directors that includes independent members with committees overseeing key aspects of the company, such as legal, risks, strategy, to name a few. A broad team of experts is supported by a strong base of more than 2,500 employees who share the commitment and the ambitions of the company towards growth. We are proud to share with you that our workforce boasts 93% urbanization as we continue to prioritize the government nationalization policies. Abraj also strives upskills its employees in line with the international standards. As an example, we have established in-house training center named Infitech. Our comprehensive training hub affords participants the ability to achieve globally recognized accreditation and certification. In addition to the company's commitment to excellence, Abraj has also continued to promote and adopt the highest standards of safety across its operation. It is in conjunction with the focus on addressing climate change. We are currently developing our ESG strategy to look into minimizing the carbon footprint and ensure a sustainable future for the company and for the country. Abraj has built a successful track record encompassing almost 2 decades worth of awards, but the journey ahead just as bright. And with that, I conclude this presentation. I hope Saif and I provided you with an understanding of the immense value Abraj has to offer. I would like to take this opportunity and thank MSX for providing us the platform to be here today and also to showcase Abraj. As well, our sincere gratitude to all of you for your time. We look forward to engaging with you in the weeks ahead. Thank you.
Thank you. Thank you, Mr. Al-Hamhami and Mr. Al-Harthi. I believe your presentation was very insightful. I wish you the best of luck on your potential IPO. I believe we're a bit ahead of schedule. Joining us next is Ahli Bank. I'm not sure whether they're ready. Yeah, okay. So joining us next is Mr. Habib Al-Hamed, AGM of Ahli Bank, Investor Relations Officer and Corporate Secretary, and Anand Krish Ramani, hope I'm pronouncing that correctly, Head of Strategy. Please welcome them to the stage with a round of applause.
Assalamu alaikum and good morning, everyone. My name is Habib Al-Hamid. I am the Investor Relations Officer and Corporate Secretary at Ahli Bank. Here with me, my colleague Anand Krish Ramani, Head of Strategy. First of all, I would like to thank the MSX Muscat Stock Exchange for organizing this event and giving us the opportunity to be in front of you today. The presentation will cover the following points, which is Ahli Bank overview, its evolution, key performance highlights, shareholding structure, key achievements, board of directors and management team, and business segment of the bank. The next point will be the operating environment, a brief on the macroeconomic and banking sector, overview as it was presented by most of the banks and other parties intensively in depth yesterday. The next point will be the financial performance, its key metrics, operating performance and profitability, deposit and loans, and credit performance. Followed with the next point will be the digital transformation, its strategy, and fintech collaboration. Then the 4 key pillars of key focus areas of Ahli Bank. And we will conclude with Ahli Bank's way forward, followed with questions from the audience. As usual, the disclaimer slide, everyone is presenting. Before starting the presentation, I would like you to take note of the disclaimer on the screen, which is for the information forward-looking statements and rounding figures throughout the presentation. Okay, starting with the Ahli Bank's overview. Ahli Bank's journey started in 2007, or let's say from 2007, after converting the full-fledged commercial banking. As of June 2022, the bank had 39 branches, including 17 Islamic branches. As of today, we have more than 40 branches as we have opened additional 2 branches in the last couple of months. Bank has 5 main business segments: retail banking, commercial banking, investment banking, treasury and financial institution, and Islamic banking. Bank has a strong institution shareholding structure. As you can see, the shareholding is such a pie chart below on the left side. Ahli United Bank with 35% ownership, Al Husn Investment Company 14.16%, Al Husn Business Development 9.67%, Obar Capital Asset Management 8.77%, Civil Services Employees Pension Fund 8.67%, Ministry of Defense Pension Fund 5.73%, and the remaining 18% other shareholders. As of June 2022, the bank had a market share of 9.3% in terms of gross loans and 8.6% in terms of customer deposits. As most of you know, that Fitch Rating has assigned Ahli Bank a graded rating of B+ with a stable outlook. The graph on the right side top, if you see, it's all the percentage and growth rates growth of compound annual growth rate, which for the total assets, Ahli Banks grow by 9.9% in terms of total assets, and similar percentage for the gross loans. For the deposits, it grew by 11.4% over the 5 years compound annual growth rate. The branch network as of 2016 was 20 branches, and as of year-end 2021, 37 branches, and as I mentioned earlier, we crossed 40 branches as of today. Key achievements of Ahli Banks. Total assets over 3 billion. Incremental market share last 3 years at circa 26% in gross loans and circa 25% in deposits. We have the highest ROAE in the industry and lowest NPL ratio in the industry. We are the second lowest cost to income ratio. I'm pleased to inform you that the first Islamic bank in Oman was Ahli Islamic to launch a digital new to bank onboarding. It's new to banks for the all Ahli Islamic for around 80% on new accounts to be opened through Ahli Islamic. First bank in Oman to launch Tamkeen, a crowdfunding platform for SMEs through fintech collaboration. We have a separate slide on Tamkeen. My colleague later stage will be presenting more detail about Tamkeen, a crowdfunding platform. The bank has well-diversified 9 expertise in the board. The governance structure of the bank committees are Audit and Compliance Committee, Executive Credit Committee, Executive Risk Committee, Nomination Remuneration Committee, and Digital Transformation Committee. To highlight that the Digital Transformation Committee focus on digital transformation of the bank, as it is one of the strategy where the board is focusing on. You can see the board of directors on the screen and the board committees, which is already mentioned, and the executive management, led by Saeed Abdullah Al-Hatmi, the CEO of Ahli Bank. Moving to the next slide regarding the business segments. Retail banking constitute around 24% of bank's total assets, were reached to 730 million and contribute around 1/3 of net operating income of 14.6 million as of June 2022. The bank has a strong emphasis on designing and offering innovative products and services. Consists of specialized teams dedicated for retail, premium, private banking, wealth management, and Islamic banking customers. Bank continues to focus on expansion of retail network, including digital branches. Moving to the wholesale banking, total assets reached to 2.3 billion and net operating income to 30.1 million. Just to note, all these figures are in Omani Riyals. Corporate banking and SME, offering full array of services through sector-specific teams. Continuous focus on sectors that form part of the Sultanate's diversification strategy and Vision 2040. Treasury and financial institutions. Provides a comprehensive packages of services to corporate, commercial, and government institutions. Financial institution group covers global relationship with other financial institutions and acts as an international arm of Ahli Bank. Investment banking, the corporate finance advisory division is full service financial advisory. Asset management division offers a diverse range of investment solutions. The brokerage division is a leading player in the Muscat Stock Exchange. Moving to the Islamic banking slide, an overview on the Islamic. Ahli Islamic has shown robust growth since its launch in 2013 and in line with the industry. The actual operation started in 2013 for the Islamic banking. The Sharia compliant products and services through 17 dedicated branches. Customer deposit grow by 5-year compound annual growth ratio of 18.2% compared to the industry average of 15.2%. Retail deposit grow by 55.7% by 5-year, again compound annual growth ratio of compared to the industry average 30.1%. The bank continue focus on low-cost deposit and retail expansion plans. First Islamic bank in Oman to digitally board customer through mobile banking platform, which I already mentioned it, the new to bank initiative of Ahli Islamic. On the right side, there is the graphs on the right side shows the Islamic banking growth over last 2 to 3 years with notable growth in terms of the total assets, gross financing, customer deposit, Islamic contribution to the total banking. If you see, I'll just emphasize on the Islamic contribution to the total banking, it's 16.2%. Now, I will hand over to my colleague, Anan, to take you through the operating environment and the rest of the contents. Thank you.
Thank you, Habib. Very good morning, ladies and gentlemen. It's absolute pleasure to be here this morning to share some of the slides, what we put together for you, to explain Ahli Bank's operation in a bit more detail. Right. I'm sure in the last 2 days, you would have at least seen 5 to 8 different versions of the GDP growth for Oman as well as the actual GDP. So we thought we'll also add a color to the shade. So we have the Oman GDP numbers here. I'm going to move around a bit. In case you're not able to hear me, please let me know. Oman's GDP growth has registered a 3% in 2021 and about 4.4% is expected in 2022. Now, what is key to note here is that Oman economy has shown a very strong resilience coming out of dual shocks. One is the pandemic, which all of us know now, has been an absolute bad news for the entire industry across the globe for the last 2 years, as well as the collapse of resulted in the GDP, the economy slumping in 2019 and 2020. From then on, the economy has been, I think I'm audible. I'm audible, right? Okay. Fair enough, no problem. Thanks a lot. So from then on, the economy has shown a strong improvement, supported, of course, by the oil price. What we want to try and tell you is that oil price has played a significant role because that still constitutes almost 30 to 35% of the GDP of Oman. We are seeing the average oil prices over the last 3 to 4 years, or rather from 2018, steadily going up. And in 2022, the average oil price is 105, which is significantly above the fiscal break-even point of Oman, which is likely to taper, but it is likely to continue to be above the 66%, which is expected for 2023 at $85. Now, what has that resulted, in essence, is that the government's finances improved. The government is able to manage its debt much more efficiently, and we are clearly seeing a reduction in the total government debt to GDP ratio in the last 2 to 3 years, and that is likely to continue as part of the reforms put to the MTFP, going down all the way to 44.9%. We are all aware about the recent upgrade which Fitch did in terms of the sovereign rating, which is now at BB with a stable outlook. We are expecting similar rating improvements from the other providers, rating agencies as well. Now, a quick look at the operating environment in the banking system. I've got some senior bankers in the room, so I will try and keep it brief. But what is important for us to understand, of course, the top side of the chart talks about the growth rate, the compounded annual growth rate for the last 4 to 5 years. But of course, you can always see that there is a dip in 2019 and 2020 when it comes to total assets, deposits, as well as the gross loans. Now, if you look at a bit more in terms of the operating environment, what has changed in the last, I would say, 12 to 18 months? We are seeing that the Omani banking credit fundamentals are recovering, right? I'm taking a pause there to say it's recovering. We are still not out of the woods, but still things are looking slightly better compared to what it was, I would say, the last couple of years. Asset quality still continues to be a concern. The Central Bank of Oman has really helped the banking industry in terms of supporting them, in terms of liquidity, in terms of bringing in the right guidelines and provisions at the right time to ensure that the banking sector remains stable and strong. But still, we will be seeing the real color of the portfolio post, I think, third quarter of 2022. Capital, most of the banks, I'm sure there were a series of presentations yesterday, and of course we are presenting today. You will see most of the banks are adequately capitalized when it comes to the Omani banking system. And not long ago, there was a macroeconomic stress testing which was undertaken by CBO, and most of the banks have passed that test exceedingly well. So which kind of reassures that, God forbid, we face another kind of crisis, the banks are well equipped in terms of handling such crisis. With the improvement, of course, in the oil prices, we are seeing much more improvement in terms of the funding and liquidity in the market, and which is also reflected in terms of some of the early repayments which is undertaken by the government in terms of its maturing debts. Profitability and efficiency. Again, I just want to mention that the presentations which you must have seen yesterday, as well as the financial performance, what you will be seeing shortly from here, will reiterate that the banks are becoming profitable, and they have really managed their balance sheet in the last 2 years very well, and that is reflective in terms of their bottom line. As always, there is a strong support from the government, and authorities are willing to provide a good support if the situation does arise. A quick glimpse at the operating performance. I'm not going to go into detail, but I just want to highlight a few things here. What we have here is the June 2022, which is the half-yearly performance for this year, compared to what it was in December, as well as the comparative period in terms of income statement for June 2021. Ahli Bank has registered an operating income growth of 13.3% year on year, and a net profit growth of 18.6% again year on year, one of the highest in the industry. Our loan portfolio has grown up by about 4% in the 6 months of 2022, as well as deposit has grown up by about 1.4%. It's just good to remind ourselves that in December 2021, the price money scheme, which was one of the flagship products of most of the banks in the country, was discontinued. So the banks came up with alternative ways of bringing in deposits or alternative ways of introducing products to be able to either retain customers or attract customers. So we've also done the same thing. We've launched a series of products both on the conventional side as well as Islamic side, and it is heartening to note that those strategies have worked, and our net deposit has actually increased in June compared to December. In terms of the performance key ratios, our return on equity, average equity, which my colleague Habib just highlighted, is at 10.6%, which is the highest in the banking industry. The cost income ratio at 43.2% is the second lowest in the industry. The reason why we take pride of saying that we are second lowest in the industry is a simple reason that during the period of last 2 years, we have substantially increased the branch footprint. In 2016, if you would recollect the first profile slide, which overview slide, which Habib presented, in 2016, we had about 20 branches. Now today we have 40 branches. So we have doubled the kind of branch network, and that means that we have augmented our branches, more resources we have brought into the organization, and also we have substantially investing in digital transformation, which we will just see in a minute. So despite all this happening, we have ensured that our cost income ratio is contained, and it's still one of the best in the industry. NPL, which is a very key indicator of bank's performance, we are the lowest in the industry. So it's again important for us to stress that despite the fact that what the entire banking system went through in 2020 and 21, bank has maintained to keep its NPL on check, and that is basically stemming from the fact that the bank adopts a very, very prudent asset growth as well as provisioning policy. Moving on, some of the key ratios, of course, we are trying to capture some trend here. The NIM has improved from 2.1% in 2020 to 2.3%. The primary reason for that, it will come in the next slide, the primary reason for that is the composition of our customer deposit has undergone a significant change, and it is happening to change as we speak, and that is part of the retail strategy what we are adopting. We want to try and bring down the impact of the high cost deposit in the cost of funds and try and improve the mix of retail, the share of retail in the overall deposit, and that goes in tandem with the increase in the number of branches what we've done in the last 2 to 3 years. We discussed about cost income ratio, so I'm going to spare that. ROE, again, I'm going to spare that. In terms of other income to total income, yes, we are currently at 20%, but that is where we see there is a big scope for improvement for us. We are definitely not in line with the industry. We are definitely less than the industry. The industry average is close to about 24 to 25%. So we see that as a next good opportunity for us to focus in terms of improving our bottom line. In terms of the regulatory and capital adequacy ratio, we are well above the regulatory requirement. Our capital adequacy ratio as of June 2022 is at 15.5%. Now, this is what I was explaining. The one on top basically demonstrates in terms of what has been the growth in terms of the total deposits for the last 2.5 years. We've captured the information only for the last 2.5 years for uniformity in terms of presentation of information. So the deposits have grown at a compounded annual growth rate of 9.7%. What you see in the line graph is the steady increase in terms of market share from 7.9% in 2020 to 8.6% in 2022. Similarly, on the loans and advances side, from 8.5% to 9.3%. Now, why is this significant, or why is this something which requires a kind of a highlight? Right, for 2 reasons. One, if you look back in terms of history, in terms of where Ahli Bank started in 2007, the DNA of this organization is basically a housing bank, Alliance Housing Bank, which got converted into a commercial bank in 2007, and then on, the bank has really grown. and it has really grown in the last 14 years consistently. And if you look at the incremental growth rate, which my colleague highlighted during his presentation, we have grown 26% in terms of the gross loans incrementally last 3 years, an almost similar number when it comes to deposit. Now, what it means is that though our static market share is about 8.6% and 9.3%, the incremental assets booked and the incremental deposits which has come in the banking system, we are taking a much larger share in the market. So in terms of the deposit mix, you can see that the portion of retail deposit is steadily increasing from 24.3% to now almost 35% as of June 2022. And that is a direct reflection in terms of the reduction in the cost of fund, which has helped us in terms of improving our NIM, which is the net interest margin. And we also have the composition of gross loans. So today, as of June 2022, almost 29 to 30% of our portfolio represents retail and 70% represents a corporate. Now, this is a very important slide. This is basically looking at the NPL, which we mentioned a few minutes ago, saying that it's one of the lowest in the industry. Now, what we are trying to do is we are now trying to go into the different levels in terms of how the NPL is structured. In terms of the overall industry, our NPL is 3.4% compared to the industry average of 4.4%. That's at level 1. Now, if you dig a little deeper, there are 3 stages, stage 1, 2, 3, in terms of the balance sheet. Now, if you look at stage 1, the industry average is 8.7, meaning that 80.7. It means that at the industry-wide level, 80.7% of your portfolio is well-performing. Ours is 81.7%. We're talking about stage 2, the industry average is about 16.3, and Ali Bank's is about 15.7. And if you're talking about stage 3, we are 2.7 compared to the industry average of 3%. So in all counts, the performance of the portfolio has been good, and that is again, to reiterate, based on the prudent asset booking as well as the provisioning policy what the bank follows. Now, digital transformation. Digital transformation has become an absolute necessity. It is no more, a choice. It has become absolute necessity, and it is impacting all the industries across without any doubt. So we as Ali Bank, we have been investing in digital initiatives in the last 5 to 6 years, but in 2021, the bank has actually come up with a very detailed, concrete digital transformation roadmap for the next 2 to 3 years. And those are actually based on certain very key principles. The one which I've just highlighted here, the customer experience, offering the best-in-class customer experience, across all digital points, instant gratification. So the NTB, again, which Habib just mentioned a few minutes ago, where the customer is able to open his account using a mobile app, is part of the strategy. We are adopting the mobile-first strategy when it comes to the customer. So what we mean by instant gratification, it means that the customer should be able to start and finish his transaction or his requirement through one channel at the same time. It should not happen that the customer is doing a part of it through a particular channel. Again, he's pushed to do something else through another channel, and then it takes the mix of normal route. So that is our constant endeavor in terms of trying to deliver instant gratification for the customers. Innovation is the bedrock of digital transformation. I mean, I think there cannot be any question or contest on that. So introducing innovative products and services is something which is top of our agenda in terms of the products which is on the retail side, or be it on the corporate as well as the SME side. Now, for us to try and implement this, it does not come without challenges. One of the biggest challenges is in terms of trying to prepare the organization to be able to cope with such a big change. This is a significant change, what is going to come over the next 2 to 3 years. I would say the next 2 years, because we've already started the journey this year, the next 2 years. And you have to prepare the organization. So it is important for us to prepare the organization to an agile culture where we are constantly delivering projects and products. as we go along and not waiting for an end result after a significant period of time. So the key focus areas, using these principles, the key focus areas, what we are trying to improve are enhanced customer experience, efficiency improvement, trying to introduce STP wherever possible, trying to introduce digital process automation, trying to introduce robotic process automation to try and see that how we can improve the efficiency of the functioning, not only when it comes to the customer experience, which is the front end, but also going all the way back to the back end process. So our digital transformation strategy is back to front. So it's completely based on international principles. And of course, business expansion. We are constantly looking for that blue ocean where we are able to bring in additional business, additional revenue, and also additional business opportunities. So that will also be one of the key things what we look at, but leveraging the digital transformation as the way to do it. So this is one such example in terms of what we have done in the last less than 3 months, I would say, using a business opportunity and combining it with a digital transformation or technology as the backbone to deliver it. In November last year, CMA came up with this regulation on crowdfunding. This was the first, I wouldn't say in the region, because in Saudi Arabia, UAE, as well as in Bahrain, a similar regulation exists. But in Oman, in November, this was introduced. And Ahli Bank was quick to spot the opportunity in this. Today, the biggest challenge is what the SMEs face. Today, as we speak, we've got about 76,000 SMEs in Oman. But one single pain point for the SMEs is that access to funds at an affordable interest rate at the right time. So that has been the biggest challenge for banks. And the kind of problems what they go through is in terms of they are not able to, first of all, maintain a proper books of accounts. Two, they're not able to attract the right talent in terms of the organization, because they're fairly small. Most of it is run by just a single proprietor. And third, of course, is they do not have the sophistication in terms of trying to provide the kind of information what a bank needs to be able to even assess whether they're eligible for a credit or not. And because of all these reasons, any kind of SMEs, and of course the fourth problem, which definitely is by no means less, is providing collateral. Now, an SME is struggling to try and meet its end. He's trying to manage his working capital cycle, and most of it is based on trading or services. From where will he bring in the collateral what is required? So considering all these factors, we looked at this as a great opportunity for us for the SME segment. So we partnered with a regional fintech company, which is significantly established in UAE as well as in Saudi Arabia. So far, it's Beehive. They have so far underwritten more than 1.1 billion dirhams in terms of lending to SMEs in UAE and Saudi Arabia. We partnered with them to launch this for the SME customers in Oman, whereby the customers are able to, and this is unsecured, collateral-free lending to SMEs with a very short turnaround time of 5 to 7 working days at a very reasonable rate of interest. So that is what it is. And we have already launched it in June, and we are receiving an excellent response for this. So this is just an example of saying that how do we try and capitalize on the market opportunity, and how do we bring in the digital angle to it to be able to deliver it in a much more efficient manner. So going forward, what is our key focus area? Growth in deposits and customer base, that goes without saying, with the increase in the branch network and constant endeavor to try and keep our cost of fund on check and trying to reduce it. So we will be looking at growing the deposit base, both in terms of corporate and retail, but more so on the retail side for the reasons what I mentioned. Enhancing fee income. I think I touched upon this point where I said that we are currently about 20% in terms of our other income to total income, but we are looking at different avenues to try and improve that, both in terms of improving the avenues for fee income within our existing business, and also strengthening certain business like our investment banking, wealth management, to try and increase the streams of fee income. So that's another area of focus. Prudent asset growth. This is the fundamental to our growth for the last 10 plus years, and it will remain to be the same for the for the years to come. And continue digitalization. So, like I had mentioned, we have a clear-cut strategy in terms of what is going to be the key impact areas for the bank, which businesses and which segments we want to prioritize in terms of delivering these digital solutions, and that will be an ongoing initiative or endeavor from our side. Finally, the way forward. This is just a re-emphasis or reiteration of what we've discussed in the last 15-20 minutes, I would say. Continue to focus on prudent asset growth, expanding the deposit base, enhancing fee income. Digital transformation is what we saw in the last few slides, and of course, improving the operational efficiency of the bank on all counts. So that is essentially what we had for you this morning, and I'll be more than happy to take any questions you may have. Thank you.
Thank you. You said you're supporting the SMEs. They're struggling with capital. What's the level of securities that you require for giving the loan?
Absolutely, it's a very good question. So, in the Tamkeen model, there are two models, right? This is the regular conventional SME lending, what the bank does. It's for certain target customers, which is of certain turnover, to a certain number of years in existence and all that. That is one category. There is another category of customers who is basically, I would say, anybody who is whose turnover is, say, 250,000 and above. For that category, we are actually not looking for any security. That is one of the key highlights of this particular product. So it's no collateral, faster turnaround time. It's a digital lending solution where basically the investors on one side and the clients or the customers who needs the financing on the other side, they meet on the platform, and then the whole information is looked at from the investor, and then they subscribe to that investment note depending on their level of risk appetite and the pricing what is there. So to answer your question, there is no security for this category of customers.
Of course, that is very interesting. I think all the banks should look at it. Apart from the loan, do you give strategic advice to those SMEs when they come and apply for the loan in terms of making sure that their business or the business idea is going to work?
It's actually a very good question. The short answer to that is we do not get involved in the day-to-day operations of the SME. That's a short answer, but a long convoluted answer would be the current governance framework or regulatory framework by CMA keeps a safe distance or a Chinese wall between the end user of funds, which is basically the customers, and the investor. One of the investors is Ahli Bank. So the platform in between, which is the crowdfunding platform provider, which is licensed by CMA, is the one which is interacting on both sides. So we do not directly go and offer any kind of advice or interact with the customers. That's how the whole the framework has been built.
I mean, my last question, do you know of the other banks who are supporting SMEs like this? It's a very important part of the industry in the development of any country anyway.
Absolutely, yes. Different banks are adopting different ways of doing it. So I wouldn't say that the other banks are not doing similar to what we're doing, but probably the way we are delivering it with through a crowdfunding platform is something which is very unique. I at least have not seen any other bank doing this, or at least announcing that they will be doing something like this. Probably something on the works which I wouldn't know, but at the moment, I think Ahli Bank is the only bank which is doing.
Thank you. Congratulations.
Thank you. Thanks a lot. Yeah, please go ahead.
Good morning. We've noticed a recent shift in focus to Islamic banking in terms of your branding, your market positioning, the number of branches compared to your overall branch network. Is this a strategic move considering the potential merger of Ahli United with an Islamic bank? And what would this mean for your conventional bank?
I'm glad you noticed that in terms of our continuing focus on Islamic banking. But this is part of the organic growth strategy what we have adopted. And this focus on Islamic banking has been there for the last 4 to 5 years. It is not something which has come into forefront because of anything happening at the shareholders level. Those are two independent events. Islamic banking growth has always been more than the industry average for Ahli Bank, and that is taken as one of the key.
Thank you.
Any other questions? Sure.
Statements of the bank during the past 5 years, we saw that there is a direction to issue bonds without maturity instead of going to the direction of the right issued. This is affect the dividend policy of the bank. I don't know why you are going to issue like this one in the language of a private placement instead of right issue. You know, this is, I think, one of the policy which is not make fair for the dividends of the bank to the shareholders. Thank you very much.
Sure. That's a very valid question. So in early 2021, which was in March 2021, we did come to the market with a rights issue. And what happens is that capital planning and capital structuring becomes a key part of your overall growth strategy. What is the optimum level of capital? What should be the right structure of capital, as well as the instruments what you use for capital is absolutely key. Whilst there's one side of the story saying that every issue what we do, it could be a rights issue rather than a bond issue. But also we have to understand that the overall growth, delivering the overall growth of the bank, it is important for us to strike a right balance between what is the tier 1 capital as well as what is the additional tier 1 capital. And we are definitely not substituting the tier 1 bond in place of equity. We have come up with the rights issue last year, and we will also be looking at raising equity as and when we feel is the right time to access the market. So. Right. Thank you once again. Thanks for your patient listening, and it's absolutely pleasure.
Thank you, Mr. Habib Al-Hamid and Mr. Anand Krish Ramani, for your time. I also want to remind everyone who's tuned in virtually that you may participate in this conference as well. Do not hesitate to ask any questions that you may have. I'll ask them on your behalf during the upcoming presentations. Moving on, since we're ahead of schedule today, we'll be hearing from another company prior to having our coffee break. Renaissance Services had their presentation in the second room, but they'll be joining us here to present as well. And that brings me to the fact that I want to remind you that the Investor Roadshow is ongoing in 2 separate rooms. You can check the agenda to see who's presenting in each room throughout the day and attend whichever one that you please. But without any further ado, let us hear from the CEO of Renaissance Services, Mr. Stephen R. Thomas. Please welcome him to the stage with a round of applause.
A very good morning, everyone. First of all, thank you very much to the Muscat Stock Exchange for organizing this Investors Roadshow. Rather than give a formal presentation, I'll let the slides speak for themselves while I'm telling you a story. I'm joined here today by some of my colleagues from the C-suite, CFO, CCO, and others, and we will take your questions and answers after I've told you this little introductory story. And essentially, it's to tell you about our company, what Renaissance does, why we do it, and how we see ourselves going forward, and where is the future performance and growth going to come from. And people say, you know, what does Renaissance Services do? And it can be answered in a single word, which is services. And if you allow me 2 words, I would say services solutions. And then when you dig down into the various things we do and the detail, you see that we do IFM, Integrated Facilities Management, which is essentially taking everything that is non-core to a customer, whether that's an oil and gas company, a hospital, a university, a port, and providing all those services. And those services get divided into soft services like catering and cleaning and laundry, or they're divided into hard services like maintenance. But you'll also see in recent times, those of you who follow the company, we've diversified in recent years that service platform into waste management, into utility management, and so on. And so whilst it looks very diverse when you get into those services, you see that it is still a service company at heart. And within the microcosm of all those services combined, we provide what we call accommodation solutions, where we build, own, and operate permanent accommodation for contractors known as the Renaissance Villages in the PDO oil and gas fields, where we've built significant PPP-type investment, private sector investing for the public good in Renaissance Village Dukum as a key enabler of the entire Dukum project. And, but as I say, it comes back to that single word of services. And where you see we're a key leader in the soft services, and those soft and hard services that we do for integrated facilities management means that our clients are not getting margins on margins. We self-perform where many other IFM operators outsource. But in that word service is the key of what we do. And we have our values that we actually use the acronym of the word service. And service can sound like a menial or trivial thing, but it is a noble thing. You know, we look at, you know, the essence of Omani culture. The first thing that happens when you go into a home is you are served and welcomed with kawa and dates. We've just been doing a tour of all our oil and gas operations in the desert, and there, you know, you see the Bedu thing where the stranger will be invited to eat first. And we feel very strongly, but that's what we do as a business. We really are in service. And I want to take you through those values. The S stands for safety, and it's a key part. Why are we always a serious contender with the oil and gas companies? And now when you see the green energy coming through, those are the companies that are looking for a safety ethos, no harm to people, no harm to the environment. And that is integral, not just to our values, but to the actual services that we deliver. The E is of interest to this community. It's ESG, about our stewardship of the environment, what we do in terms of our social responsibility and our CSR programs and our governance, you know, how we comply with the laws, the standards, and procedures. It's a core value for us. And those of you who've been following us, you'll see that we've been reporting with our sustainability report for more than a decade, long before it ever became a requirement here. So it's very much at the heart of what we do. The R is for respect, because we respect each other in the company. We respect our clients, our customers, our shareholders, our investors, all humanity, from the great to the most humble. It's a key part of a service company. The V is for our vision, that is simply stated to lead the future in safe, smart, sustainable services solutions. And more of that and how we look at that going forward in a moment. The I is for integrity. and that is about the compliance and honesty of us as individuals and as a company. It's what you do when no one else is looking, both in your work and in your life, and it's a key part and key value for us. The C is for caring, and this is crucial to us in terms of what we do and bring to our customers, because we care for individuals, whether it's the worker, whether it's the hospital patient, whether it's the school child that we're there to provide services to and look after. And we care about the environment, and we care about the assets that are put under our care, either the ones we own ourselves as an organization or where we look after assets for our clients. And the last E of service is for empowerment. And this is about the trust and providing the correct resources and levels of authority and procedures for our people who are out in the field. We employ over 8,000 people who are out there providing the services while I stand here talking to you right now. And it is so important that they are trusted and empowered and given the tools to succeed. So that is what we do, and it is the values that are the guidelines and guideposts that point us in the right direction of how to provide those services. But we also have a why we do this, and we have it stated in our purpose, which is transforming every life we touch. And we're serious about that. It's what makes us get out of bed in the morning and go to work. So whether it is about the shareholders, and we want to see their value created, we want to see them paid the regular and consistent dividend, whether it's our customers and our clients, whether it is the worker working out in the interior on a port or wherever it might be, we really want to make a difference, make tomorrow better than yesterday, because it was a Renaissance project and a Renaissance service that was delivered. So then this brings us to the how, because those of you who follow us have been seeing us talking about Renaissance 2.0, and that's taking the how we do things today, but making sure it's leading from the future and future ready. And so there are 5 things I would highlight, and they come, all of them, under the coverage and protection of our safety and our quality systems and processes. But the first of those is life cycle value care of the assets that we look after, whether it's our own Renaissance Village Dukem or the Renaissance villages in the oil fields, or whether it's what we look after for BP or a PDO or any other client where we take care of their assets, or a hospital or anywhere else. And so it's not just that reactive maintenance issue or preventive, it's about a life cycle care. Our PDO villages are 22 years old. And we have, the good news that we shared with investors recently, that they are confirmed to now be part of the PDO accommodation solution for the next 22 years to 2044. And that life cycle care of those assets, making sure that they're ready and able and robust to carry on for that time, is what enables PDO to make a decision like that is guaranteeing a key part of our income stream for the next 22 years. The second thing is optimum worker welfare. And if you go to somewhere like Renaissance Village Dukem, yes, we have senior executive accommodation that you would all be welcome to come and stay in, and others, supervisors and so on. But it is the blue-collar worker living in shared accommodation facilities, but that is given a dignity and quality of life. It's got the medical backup, it's got the recreational. So it is, that person, I see you, I care about you, I want you to live in dignity. And we provide that as a core service. And, what we do is provide it at optimal value as well, at an affordable value that is cheaper than trying to do the same, meeting ILO, International Labour Organization standards, which is the standard that the Omani government want to see us all providing to our workforces. We provide that at a really economic level. So that's the second piece. The third piece is sustainable green environment. So we're driving constantly at how can we reduce, reuse, recycle? Yes. How do we use less water? How do we use less electricity, less energy, and at the same time deliver those high standards? So the green agenda comes with a Renaissance project. You're getting that constant, continuous improvement of reducing our carbon footprint. And again, you see that reported in our sustainability report all the time. So the fourth thing is that we make a positive local impact. And of course, Oman is our biggest market, it is our home market, and so I'll talk about it there, but we strive to do this wherever we operate, and we do have now operations going in the UAE and Qatar. But that positive local impact is about employing more and more Omani colleagues. That does not stop us valuing our expat colleagues who are helping to deliver that in-country value program as well. But as we grow, more and more Omanis are joining us at every level of the organization, C-suite down to the blue-collar, semi-skilled jobs, and doing a great job at every level. It's also about the Omani goods and services that we use in our supply chain. It's about the SMEs that we develop and help to be really competitive as a result of having been nurtured by ourselves. And it's about the local communities that we serve and the CSR programs that we do. So we really strive to make a positive local impact. And the fifth piece is a bit like the green agenda part, an exciting piece of it, is about future-focused innovation. This is at the heart of our Renaissance 2.0. So it includes automating a lot of our work and our systems and our processes. So it's about, yes, it's technology, it's about robotics, it's about AI, it's about digital transformation. All of these things, we have constant programs where, and we strive not just to do it to make ourselves more efficient, we strive to make our clients and customers more efficient and pass on these benefits to them. And as we drive down this future-focused innovation agenda, it makes the jobs more interesting for all of us in the company at every level of the organization. It makes our customer experience something that is better, and it makes sure that we are leading the market in which we operate. And the interesting thing is where we do lead in this market, in our soft services, in our accommodation solutions, where we have 65% of the market and 85% of the market, is something that investors and brokers and analysts look at and say, so where's the growth going to come from? But if you look at the areas of service that we've moved into with the waste management and the utilities, etc., we have small shares of this market, and those are growing markets. And so when we look at everything that we do, we're not saying, if I went back to the list of IFM and Soft FM, we have a group of competitors in each of those spaces. But there is no one who is providing that whole holistic issue of services in the way that we've just defined it for you. And so our competition or our challenges lie in things that we feel the direction of travel is very much in our favor and that we are already playing where the ball is going to be. So things like optimum worker welfare. We've seen how, and I'm quite sure in Qatar there's some excellent worker welfare and worker accommodation, but that's not what made the news around the World Cup. It's the way workers were treated who seemed to be building the stadia and so on. And we know, in spite of the government's own standards here, we know that there are people who undercut the standard and don't treat their workforces in a way that we would expect to see to meet and comply with the government standards on this. But we provide that as a service. So our challenge isn't who are the competitors in that space. Our challenge is how do we get all employers to see the value of looking after people in this fashion and what it means for your productivity, for your retention, for your ability to attract Omanis into your workforce, and all of these positive things about positive worker welfare. And so it's about getting the authorities to be able to enforce the standards better and working with them to achieve that. But I think you'd all agree that the direction of travel in the 21st century and how we look after our fellow human beings at the low-skilled job level, we're in the right place. And that's where the growth is going to come in terms of that type of service. Again, what we're doing on the renewables, what we're doing on the green agenda, what we're doing on the future-focused innovation, which is changing the way the services are provided, automating a lot, making jobs much more interesting, less manual, and more technical operator, again, open to inviting more Omani colleagues to more interesting jobs for the future. And we're also, so as we diversify our services, we're diversifying our sectors, we're diversifying our geography. Geography is always a little tougher to do, but there's key elements of our Renaissance 2.0 program that includes looking at the age profile in the company. We have this thing called the 60-40-20 rule, where those either side of 60 tend to be in the direction and wisdom roles of the company. Those either side of 40 are in the jobs that are actually executing, and the 20-year-olds who've got all the ideas, who understand, and they've got the imaginations that is fit for this century, and somewhat marginalized. We're trying to break that open. We're looking at a shadow youth advisory board so that we've got ideas coming in from around the world as well as from around the youth of Oman. We're looking very seriously at DEI, of course. We're very thrilled that we've got 1,350 female colleagues working with us at every level of the organization. But we're looking to get more and more of that, not by quotas, by merit. But believe me, the sisters in our company are very much there on merit and doing a fantastic job. And so these are the key issues that we're looking at driving forward. We're also looking at what we call edge projects. Everything I've described is our core business around those services. And we need to spend 80% of our time at the moment in that, because that's where 100% of the revenue and profit is coming from. But we're also looking at investing in smart startups in Oman and elsewhere that are related to the services that we provide, that provide some of those enhancements. It might be the automation or the digitization of what we're doing. It might be the greenification of what we're doing, and so on. So in those spaces of renewable sustainability and ingenuity and innovation, we're looking at small investments in which we will co-own and nurture businesses that can be as big as or bigger than we are in the core today. That is how we're looking at the future. And I've taken you through what we do, why we do it, and now how we do it. And so from that, I will be joined by my colleague, the CFO, Vishal. We have other C-suite members with us, depending on your questions. And thank you for listening, and we'd like to open up for your questions and answers. Thank you very much. Ma'am, I think they have to bring you a microphone. The lady here.
Thank you very much for your presentation, Stephen. My name is Ra'a, and I'm here on behalf of Citigroup. I have two unrelated questions. The first one would be, I think you spoke a lot about your operational priorities in the next coming years, but I think my question would be, what are your strategic priorities in terms of any growth plans, both product-wise or geography-wise? And then my second question is on, I see that you mentioned a lot on renewables and the green agenda that you have. I don't know, shall I stop here and then maybe go ahead? But I saw that you had mentioned some some buzzwords on renewables and green agenda. So I wanted to understand, what are you currently doing? And if you are not doing anything yet, then what are you planning to do in the next 2 years?
Sure.
So Steve, I will just touch base on first element of the growth, and then Steve will elaborate on this.
Please.
For any growth, we need capital. And you have seen our leverage ratio and the gearing ratio and net debt to EBITDA, it is all-time low. So we can invest based on our current balance sheet, almost 100 million real. That is our capacity at present. So business is getting ready, capital is ready, and those will be invested. So just I'm giving the size of the balance sheet based on the cash available in our balance sheet and the lines available and the support of the banks. We can invest up to 100 million real over next 2 years. Over to you,
And
Steve.
you know, the important thing about the point Vishal's just made is, if you look at the evolution of our investment in assets in our accommodation solutions, because of the success of our Renaissance villages in the PDO oil and gas fields, when it came to doing the Renaissance village Dukum, we opened up the investment potential to the whole market, and we had, you know, obviously sovereign wealth with Royal Court Affairs, we had Ministry of Defence Pension Fund, Bank Muscat with us, and also local community investors, Al-Konji Group, and others who have come into the property ownership side while we own the operation of that 100%. So, you know, we're looking actually at sharing the opportunities as we go forward as well. So that is an additional source of funds for growth. In terms of the markets, and we are looking at other GCC countries. If we were able to replicate a number of the things that we do here in those markets, it is tough because you do need a USP, and in some of the pure services side, those markets are already well taken care of by existing service providers. So it's in some of these things where we do have that sort of speciality, like delivering an affordable solution on worker welfare. These are areas that people are interested in. And of course, in the IFM space, that is something that you can go in with your knowledge, skill, and experience, and we're starting to get invited more and more internationally to opportunities. But we're not limiting ourselves to the GCC.
And just to add on what Steve talked about, GCC, in UAE, we started 5 years ago. Our turnover was 20 million dirhams. We crossed and handled the entire COVID, and this year we are expecting a revenue of north of 70 million dirhams. And our market share is in UAE is less than 1%, and UAE GDP is 5 times bigger than Oman. And in Oman, we have a market share of more than 65%. So we can see the growth potential that is available in some of those geographies which are known to us and where we are working on. Steve, on Qatar.
And on other things, if you look at the waste management that we've moved into, and this particular market here, where BIA is running a fantastic program. They've started with waste collection. The market will move, and that's about 100 million reals a year market for the collection. And moving forward, we've started clearing dump sites in the interior oil fields for BIA and ultimately for the oil and gas companies. The issue of waste treatment and recycling is going to become a big issue. Far too much goes to landfill. So there's already a growth area of business that doesn't exist in the country at the moment, but is absolutely the direction of travel. And it sort of leads me into your second question on the sustainability initiatives, because that's one of the things that we're doing, is actually clearing up the oil field waste that at the moment has been kept in large landfill areas, and treating that in different ways and finding end users for it where possible. In terms of other initiatives, obviously we are looking at a major solar program in our existing own facilities, and there's a tender being issued right now on that. We've done things, I'll give an example, where we've got scale. In Dukum, we've just invested in a tunnel washer machine. Sound boring, but This machine, backed up by other automated processes of folding for shirts, dish dashes, coveralls, etc. This requires 45% of the workforce. It will reduce 60% of the water usage and 40% of the energy usage. And it's driving those things into what we do, that in this case we're doing it for ourselves because we own and operate that business, but it's then bringing those solutions to our clients as well where there is sufficient scale. So as we get greener in what we do, reducing our carbon footprint, we can take that ability on, because of course we do maintenance and hard FM services as well, and sell those on to our clients. Thank you. Yes, ma'am.
Thank you, Stephen, for your elaboration. But you didn't answer the question. Like, Renaissance started with vessels and services and hospitality. What is the future plan of Renaissance going forward? Yes, I know you've said about the eco and the green, but are you going to tab into the green and the eco sector, or what exactly? Are you staying in the service sector?
No, we're staying in the service sector. What I was trying to describe before in terms of what we do is services. So in IFM is actually providing every service that is non-core to that client. Now, some of it you might outsource because like the CCTV cameras or the elevator maintenance, etc. But it's actually providing all the services that are non-core to the client. I mean, one of the key issues we have is at the moment here in our home market, there are a few. For example, we provide this service for BP in the Kazan field. There are a few who see the projects as IFM. They let out to a single partner over a sustained period of time, so you can have KPIs on SME development, on Omanization, and so on. But then that IFM provider provides all the services. Now, in our case, we self-perform a large number of those services, and we will be diversifying into more of those services while still being, for those in the investor community, seeing us clearly as a services company, pure and simple. And at the moment, the old style of doing things prevails here, where you get multiple single subject catering or landscaping or maintenance contracts over short periods of time on a cyclical tendering basis. And whereas the rest of the world is moving towards longer term, 6-7 year renewable IFM contracts that help to drive up the standard and lower the cost through some of the green initiatives and other things, or the automating or innovating initiatives that we've been describing. So that's what we do, and that's really the message we're trying to say. We do this anyway, and that is the direction of travel of outsourcing across the world. It started here. It started here with some of the larger companies. The government isn't there yet on these things, but I believe the government will gradually move to that kind of contracting. And that's what we need. When that does start to happen, we would be an Omani public company that is already absolutely skilled in providing those IFM services. So yes, if I've given the impression that we're moving into sort of green or assets and so on, no. It's the green agenda in the service business, and we will remain a service company. Even as we look at some of these edge projects to invest in, they will be related to our services. Thank you. Yes.
Assalamu alaikum.
Alaikum salam.
Sir, you mentioned that you invest at startup. Just I want to know, if there is any already investment and at startup, and which type of those startup you are invested in?
Yeah, startup.
And another question, which is, if you have a plan to invest at startup, which types of services you are targeting, and how many entrepreneurs you are targeting per year?
So it's a program that we've just started as part of Renaissance 2.0. We've identified the fund that we plan to allocate if we get the right investments. We will be looking at, say, 3 or 4 in Oman, 3 or 4 elsewhere in the world is the sort of scale of it. And this will be rolled out in next year. The type of startups that we're looking at would be in the green space or in the innovation and automation space related to the services we provide. So let me give a random example. For example, a robotics company that is developing the right technology to have automated cleaning robots, automated grass cutting robots, and so on. So that would be the sort of thing related to the services we provide that we'd be interested in nurturing, seeing how that goes as a business, but also it would then be feeding into our business, making us more efficient and providing a more interesting customer experience that we can then offer on to our clients. So it would be related to our core business and supporting it, but it would be different. And of course, we'd be looking at people who clearly have got the knowledge and skills to drive that forward.
And just to add on, that we have reached out to all our banking partners in Oman. And we mentioned that you receive many projects where startups are there, SMEs are there, and those are exciting stories. But they need support in terms of the corporate governance, they support in terms of the financing, in terms of services like accounting services. Renaissance can play a role. So we already reached out to all our banking partners that if they receive the project, they are ready to fund those projects from the debt side. Renaissance can be equity partner and grooming those startups as well. So it's not only about from our network, from all our banking partners network in Oman as well.
I think this also relates into not just those smaller companies or edge projects that we're calling that we would invest in. I'd like to pass a comment on how we nurture SMEs to come into our actual supply chain and into our services. Because we don't regard this as an issue of entitlement. Because you're an SME and you're local, etc., so okay, we understand we have to pay a bit of a premium for it. What we see is that we would like to have SMEs that are able to compete. What's important to us to compete is safety, the quality, the speed, so on-time delivery, and price. And what we will do for a local SME that we wouldn't do if we were buying it from an established international source is we will help. So if you don't have the safety HSE systems, management systems, or the quality systems, etc., we'll help you to get those in. And we've got SMEs, there's one that from over 20 years ago is now a major company and a major client of ours. We've got other SMEs that by taking this approach and making them be competitive, not have an entitlement, they're now very competitive and providing services. For example, a company that we had nurtured while we were building Duqm is now very active and growing as Duqm itself grows and there's more construction there. So this is also an approach we take to the SMEs that won't necessarily be part of our edge projects, but we want them to be part of our supply chain. And the shorter we make our supply chain, the greener and more efficient it is. Okay.
Thank you.
That's it. Thank you very much. Thank you very much.
One
Oh, we got
question.
one more question.
Maybe we can take one last question.
Okay.
Go ahead.
Yeah. How much OQ workforce participation in Renaissance Village Dublin?
Oh, yeah. So OQ8, at the moment, we have in Renaissance Village Dukem, we're just under 11,000 people this morning. And of those, our permanent residents are about 5,000. So the delta of that will be the EPC contractors and their subcontractors. So there's about 6,000 of OQ8 related occupation in Dukem at the moment. Not in Dukem, in our facility in Dukem.
Okay, what's the next step, sir? Because I expected maybe end of this year, this project we're going to finish. So who will occupy that place then?
Yes, so this is a very important question for us. So ideally, we would like to be hearing of another major project. You know, the way industrial cities grow, if you look at Yambu, Jubail, and the sort of predecessors of what would be a modern, smart industrial city being developed in Dukem, is that one project begets the other. And the first thing you need is your refinery that adds value to the oil barrels coming into it. You then need immediately the downstream that will add value to the products coming out of the refinery. And there are 6 products that can potentially come out of the OQ8 refinery. So the petchem project, which is suspended at the moment, would be crucial, not just for us, for Oman to make sense of the investment that's gone into Dukem so far and that's gone into establishing OQ8 refinery there. So I'm sure we hear as many rumors as everyone else in the room. You're probably better informed than us. And we do hear that there is now talk of petchem coming back, and of course a degree of the feed has been done previously, but there'd have to be a period of gestation for that. So what happens in between this and the next project? Because the business model is you will get your peaks for the project, and when the project finishes, a smaller residual workforce will be left behind. There are exceptions. For example, the dry dock is not a small residual workforce. There are about 3,500 at the moment and growing next year up to 5,000. And we've signed with them for a further 5 years to stay with us. So there'll be some growth coming from the continued success of the dry dock. And there will be more permanent people coming on the logistics front as the port now is getting its cranes. Once those cranes are operational, the port starts to grow in terms of its services. We've also got the military-related business that comes with the port. You know, right now we have the UK military staying with us for the forthcoming exercise. This will be 1,000 people over the next few months and so on. Then there's the other projects that are coming, the green hydrogen and other related projects, ACME and so on, all of whom we're in conversations with to understand their histograms and dates and requirements. The next 3 companies coming in, there are 3 road projects that have just been awarded. They are mobilizing, so we should see 3 groups, 800 in one case, 600 in another, and 750 in another, joining us shortly in the coming couple of months. So that envisages that we will be having similar occupancies through next year to the lower occupancy that we've had as the refinery winds down. We should expect that next year. And for the next big bump to come, we would need to be hearing of petchem or any other downstream project of that nature. Okay? Thank you very much. Thank you.
Thank you, Mr. Stephen R. Thomas, CEO, and Vishal Goenka, CFO of Renaissance Services. We have one more speaker before we go on our coffee break, which will go on for 15 minutes. I'd like to remind you that the Investor Roadshow is ongoing in 2 separate rooms so that you can take that into consideration after the coffee break. But before the coffee break, we'll be hearing from one more speaker, John Gollifer, General Manager of Middle East Investors Relations Association, who is going to be giving a short brief about investor relations. Please give him a warm welcome to the stage.
Good morning, and I won't keep you long. This is impromptu, and I'd just like to, on behalf of the Middle East Investor Relations Association, your professional body for investor relations, thank the MSX and indeed their wonderful CEO for bringing together us, market participants, you, the listed companies, and your target audiences, the investment community. As a professional body, we promote best practice in investor relations, and it's a real honor to be standing here talking to you as we support MSX. Investor relations, in essence, as we've been hearing, is a strategic function that acts as that all-important conduit between you, busy management, and your target investors. Not just your existing shareholders, but those prospective new investors, including from outside the region. To help you do that job, we promote best practice, we promote it locally, we promote it regionally, and we seek input from international practices as well. We do that by bringing together people like your good selves, peers, we promote professional development, and we support events like that. I applaud all of you for supporting MSX. Having worked at an exchange myself for many, many years, I don't think there's anything more heartening or more encouraging than seeing an active market operator doing great initiatives like that. Thank you, CEO. Thank you, all of you, and enjoy the rest of the day. I look forward to meeting you in due course. Thank you.
Everyone may go on a coffee break now. We all have 15 minutes. You're going to find a few refreshments and coffee right outside the hall. Enjoy. Is my mic on? Is it on? Good morning. May everyone please return to your seats so that we can proceed with the conference. ما بيتها. Good morning. May everyone please join us back in the hall so that we can continue with the conference. Thank you. Please join us back in the hall and proceed to your seats. All right, I hope everyone's feeling refreshed after that coffee break. Can everyone please have a seat so that we can resume? Just a reminder before we begin, we also have a room next door, and they currently have United Finance presenting. Over here, we'd like to welcome to the stage Mr. Haytham Al-Fanna, CEO of Oman Flour Mills. Please give him a warm welcome to the stage.
Good morning, everyone. I hope you had a pleasant morning session. I will be taking you through the Oman Flour Mills journey, a little bit on the financials for the first half, and hopefully we'll take questions at the end of the day to address any concerns. Can I have the clicker? لا الكليكر. هو هذا. Okay, so we'll start a little bit on the group structure, then we'll move to the macroeconomic environment. We'll highlight the financials, and then just a brief on the new products that we have within Oman Flour Mills, and the future new projects that we have, current and future. This is basically Oman Flour Mills group structure. Oman Flour Mills sits at the top, the red box, followed by two companies, Oman Fisheries, as you may know. We own 17.2% of it. And we have Atyab Investments, which is owned 100% by Oman Flour Mills. It's the investment arm of Oman Flour Mills. Under Oman Atyab Investments, we have Arabian Food right on the further right corner. Arabian Food Production Company, it's SAOC, which entails three main companies. Modern Poultry Farms, Emirates Poultry Farms, and Gulf International Poultry Farm. We are in these three companies are in the table egg business. One of them is based in UAE, two are based in Oman. Combined, they produce about 2 million eggs per day, and with this production, we are the largest in Oman and one of the largest in the GCC. Next to it is OMAS. OMAS is a newly established company early this year. It's based in Australia. The idea of this company is to procure grains directly from the farmers to avoid any middlemen who tend to sort of increase the price. Atyab IFCO, the third company from the right, is basically a partnership with our partners from the UAE. IFCO, it's a multi-billion company mainly investing in food sector. Under that, we have Suhar Poultry, the well-known brand Aryaf. It's in fresh chicken. We do about 20,000 chickens per day. And we have a small stake in Usul Poultry, 9% stake, which Usul is basically a company that does DOCs, day-old chicks, which goes to the poultry industry. So it's mainly a B2B business, Usul. We have Suhar Flour Mills. We own 60% of that. It is a flour mill and silos of a capacity of 160,000 tons. Atyab Technical Services is a sponsorship company for SGS, a well-known Swiss company. Atyab International, which is the third from the left, is labs in the food sector. Basically, we do inspections, testing, anything related to testing and inspection of food. We do halal certification, and we are the leading company in inspection in Oman. We recently started a new company in Uzbekistan. We signed with the government in Uzbekistan to establish new labs and facilities there to do the testing of all food requirements for export in Uzbekistan. We do also a lot of training there. Technopark is an industrial innovation, training, incubation center on a regional scale, where we will have testing, we will have a lot of incubation for SMEs. We will have R&D within the facility. So it's a big scale that caters to the food industry. Tiyab Industries is the well-known Tiyab bakery. Basically, it's anything, it's all the bread that you see in the market. We cater to a lot of international names, McDonald's, Burger King, and Starbucks. If you've been in Starbucks anytime, whatever you see on the shelves other than the coffee comes from a Tiyab bakery or a Tiyab food industries. The last company, I know it's not very clear, but it's Bioproducts Oman. Bioproducts Oman is a newly established company. It's a greenfield company. It's in the procurement stage where we will be producing fish feed. You have seen recently there's a lot of fish farming that's happening in Oman, and this will be an addition to produce fish feed for the fish farms. Macroeconomics, I'm sure you've heard about the current situation in Ukraine and Russia and the challenges of grain industries. It's been a rough ride over the last couple of months, but it is in the verge of easing out, at least for the next couple of months. This is the impact based on the recent pricing of grains on the Oman flour mill basket. The total impact is about $100 million. This is the market when it comes to wheat, corn, and soybean. As you know, we produce flour. We also are the largest producer of feed in the local market. The trend from 2013 has gone up drastically till 2020. It started in 2020, just before COVID, and it started just heading all the way up. Corn went into similar situation, and soybean also has been on the same trend in terms of increase in prices. The main reasons behind, or the main reasons of having all these price increase is, of course, supply shortages. The current between Ukraine and Russia, there is about 29% of the total export market of wheat. Weather is an important factor that has been started affecting the grain beginning of 2021. The La Nina situation in the northern hemisphere, which is basically the increased cold and the increased rain. La Nina in Spanish is the girl, and I'm sure you've heard of El Niño, which is the boy. The boy causes hot weather, and the girl causes colder and wet weather. Both extremes have an impact. This is the first time in history where we have 3 consecutive sessions of La Nina. So there are weather challenges. The war in Ukraine, as I mentioned, 29% of all wheat produced, exported around the world comes from the 2 countries. Oil prices have an impact, and you might wonder why. Other than the shipping cost, oil prices, a lot of the corn is used in biofuels. 40% of the total corn produced around the world is used for biofuels. Biofuels, when the oil prices go up, then a lot of the corn goes to biofuels, which puts a stress on the corn. So availability of corn becomes less for the animal and human consumption, and a lot of people move into wheat, which also increases the price of wheat. So it's like a domino effect on the industry. In terms of the first half, we had a 22% growth in revenue, driven by both increase in price and in quantity, volumes. The cost of goods sold, you might see that there is an impact of about 13 million riyals, which had a bigger impact on the bottom line. Now we have, despite the fact that there was 100 million riyals increase in the grain prices, we have managed to outsource in a timely manner, where we have offset a big portion of this impact. This is on the group results. We are still drawn back by Suhar Flour Mill's performance on the group results. It's sort of eating out on all the other businesses. The main reason behind Suhar Mill's performance is the readiness of the silos. Silos took a lot of time to be ready, and usually flour mills cannot operate without a silo. And the silos are now in the final stage and should be ready soon. These are some of the products we thought we will diversify. It's not anymore just white and brown flour. We need to have varieties in the market to cater to the demands of the consumers. So we've came up with a patent flour, which is a very super premium high-end flour. We came up with the Omani burr flour, which is basically from the local produced wheat. We have the regular burr flour. It's stone milled. The process actually uses the traditional way of milling, which is stone milling. And we are introducing the organic and a few camel feed, which is basically caters to the feed industry. Our new projects is a premix manufacturing. We use a lot of premix into our feed. We import the premix. We have already awarded the contract and started the erection of the premix manufacturing plant, which will cater to the in-house requirements, plus all the other local requirements for companies that are producing their own feed. We have finalized the feed mill expansion. We will be increasing our capacity by almost 35% in the feed, because the demand is increasing year by year. So that will add. It's already in the process, and the equipment has arrived into the country. Mini factory cluster is basically, we have realized we import a lot of food, but the factories are quite small. For example, if we talk about French fries, we import 5 million riyals of French fries from outside because we don't have local facilities. So mini factory cluster is basically small factories within one cluster that we are working on. Each factory is valued at 1 million riyal or less. Australia direct sourcing, I talked about that. Cornstarch wet milling, one of the highest imports of grains is corn. So we thought we need to process it and find a way, what are we going to use it? So we're going to process corn, and we will produce cornstarch to mainly cater to the local market and in the region. Local bakeries, we are looking at opportunity with as an SME to start the ready-to-eat and the cafe segment of the food sector. In terms of innovation and niche products, the biggest challenge today is protein. No matter what we're talking about, rice, bread, chicken or meat, it's all about protein. Humans need protein. Currently, there is 200 million, if I remember the figure correctly, 200 million tons of protein produced around the world. Our requirement is about 10% more than that, and that's what keeps 800 million people in actual hunger. This number will have to increase, and we don't have any sources of protein. We have exhausted the majority of the agricultural land, and by 2050 we will not have enough, so we need to find alternatives for protein. And these are some of the alternatives that we are currently exploring. Water lentils, initially to cater to the human consumption and later to cater to the animal consumption based on the feasibility. Insect protein is basically to cater to the animal feed. We have looked at azola. We have already done an experiment in Oman on the azola to produce protein from azola. Azola produces 25 to 28% protein compared to the water lentils, which is 45% protein. Spirulina is a very high-end protein source. It is farmed usually on dry land and can be produced in Oman. There are several experiments that have already been taken place. And we tend to explore this for the human consumption because it is a very high nutrition. This is one of the superfoods that are known in the market. That's it for my presentation today. And just to mention, Oman Flour Mills started in 1977. I was told, I'm not sure it was the first listed company, but I would like to believe it was one of the first listed companies in the stock market, and I look forward to any questions that you will have.
Hi. My question is, given the forward-looking outlook for food grains, especially wheat, what is the long-term hedging strategy, if any, Oman Flour is engaging in?
Well, that's a very good question, and I forgot to mention I will only take the easy ones, but the challenge today is the market is unpredictable. We have, on the other hand, some people believe it's a bearish market, some people believe it's a bullish market, especially after Russia and Ukraine reached to an agreement to start exporting from Ukraine. But that agreement ends on the 15th of November. What will happen after that? Will it be renewed? That is definitely a big question mark. The world, everybody heard about the world talking about a recession. Usually recessions bring in lower demand, even in food. So the market is mixed. We don't know if it's going up or it's going down. So, and with hedging, usually it comes with a very expensive price, but with an operation like ours, hedging becomes even more expensive. So thank you very much for your question.
Thank you.
Any more questions? Good. Yes.
Hi, thank you for the wonderful presentation. I had a question on the subsidy mechanism, which could you just elaborate on that? Because my understanding, correct me if I'm wrong, you know, what my understanding is that if the wheat price goes $300 tons and above, that will be reimbursed by the government. So is it specific for all the wheat consumption, products which are consumed by wheat will get that benefit, or is it specific like, is it for the flour mill or for the feed mill?
Well, I came in today and I kept my fingers crossed that nobody will ask me about the subsidy. But since you did, see the subsidy, yes, the government will take care of any price increase above $300, no matter what, and it will cover it. It makes our job a little bit easier, but we still want to save money for the government. We don't want to go out there and just buy whatever we can get. So we still continue to try to source the cheapest sources of, or cheapest prices when the market is down. The subsidy covers only the flour so far, and that will continue till we get anything else from the government. So the subsidy is there just to cover. The financials, as we have indicated in our disclosure, does not cover the subsidy so far. Hopefully it will be there, I think, in third quarter, it will be in the financials.
Oh, that's great. And so this means flour even it includes Soha flour mill as well, right? Or?
No, that's a very good question. As of now, to my understanding, no, but we're yet to clarify that with the government.
Okay, fair enough. I just want to understand, when you get the subsidy, is there any restriction of that means that you can't increase the price? Is there any kind of a restriction or cap in that, or just want to understand that?
Yes, well, the idea is that the whole idea of the subsidy is to maintain the current pricing. Okay. So whatever prices were there in the market at the time of agreement to the subsidy will be maintained for the local market. The export market is actually a different story. The subsidy doesn't cover the export market, but at the same time, the export market, if I give you an example today, gives you a better realization than the local market.
That's great to hear. One last question from mine is your stake in 33% in Arabian food production. Correct me if I'm wrong.
Yes.
So could you just elaborate what is the growth strategy and how does it be a valuable contribution to Oman flour mills? Maybe a longer run. I'm not talking about medium term, but if you can just.
Okay. Well, the whole idea, Oman, we are currently 50% self-sufficient in terms of table eggs. We still import 50% of our requirements. We feel that by the new farm coming into place and starting production, we will be able to cater to 100% of the local requirements. The biggest challenge with the eggs is that you need to store it at a specific temperature to ensure that it is fit for human consumption. And that cannot be maintained with imported eggs. That's why you see in India, for example, the shelf life of eggs is 21 days, while in Oman it is 3 months. So that's hopefully going to change, and I think that will give a big boost to the group, Arabian Food Production Company, in terms of the eggs for the local requirements. So that we see plenty of requirements in Oman. We are currently exporting to the UAE and Qatar, but I think we will have enough demand. There is always an element of imports, definitely will be there. But I'm very optimistic. I think this company will have a lot of future growth, a lot of potential. Our partnership in the new farm, which will produce about 1 million eggs in Ibri, is with Issei Foods. It's a Japanese company which brings in a technology of better efficiencies within the farm, better sizes, and better overall quality of the product.
Thank you. It was very informative. Wish you all the best.
Thank you very much. Appreciate it. تفضل.
You own 17% from Oman Fisheries. I don't know what is exactly planned for that one, and at which element you are putting now, available for sale or as associate company?
Well, I'll give you the basic story. We looked at Oman Fisheries, and it was losing money over the years. We felt we can't have the raw materials here and have Oman Fisheries. So there are areas of improvement. That's why we went in and we bought about 25.4% of the company, and we invited a strategic partner to join, which was announced recently, which then the whole idea is to create better value. I'm sure my colleagues, Suleiman will, in the session later on, will talk a little bit more about this. But our strategy is to sustain or to invest in a business that we believe will have a good future, especially here in Oman. Our strategy now as Oman Flour Mills is to look at anything from the farm to the fork. So the investment is stretched throughout, whatever profitable, whether it's local or international. I think Oman Flour Mills has the resources and the capabilities to do, whether financial or in terms of expertise.
So now it is available for sale or associate company?
Oh, you know, I can't answer that question. I was trying to just, I cannot answer that question with a yes or no. But it's a business at the end of the day. Whatever we feel best, if the long-term investment is better or on the short-term investment is better.
Okay, you're going to continue that quantity now. Now you have 17% after dilution, after that partner is in. So you're going to continue buying stocks or you stop?
Can you repeat the question? Sorry.
Now already you own 17%. Before I think you have 24.
Yes.
But after dilution it is went to 17.
Yes.
So the plan is to continue to buy it again or you stop this quantity? خلاص يعني.
Well, as you know that the Oman Fisheries share is not very liquid now, since the majority of it is owned by 3 major stakeholders. But if in the future the company requires fresh injection or will be expanding, will be issuing more shares, and it was heading through the right direction, I don't see why we shouldn't invest.
Last question about dividends this year. An expectation?
Well, I can't answer the question too. So in terms of dividends, I think you've seen the history in the last couple of years in terms of dividends, and we'll definitely evaluate it as we go. Okay?
Thank you.
Thank you. Very tough questions, these. Okay, that's it. All right, thank you very much. Thank you for listening.
Thank you so much, Mr. Haytham Al-Fanna, for your time and for responding to the multiple questions we've had. Please help me welcome to the stage Mr. Fatik Al-Blushi, CFO of Oman Cement Company.
بس هذا وده back this one. Assalamu alaikum. Hopefully I'm very audible to all, and if I'm not, just let me know, please. And sometimes you might find me rushing. You cannot hear? Okay. First of all, we would like to express our big thanks to MSX for inviting those publicly listed companies and the people participating in this kind of stakeholder universe that really adding value to the economy and going towards the same 2040 vision in order to deliver the value expected. Oman Cement, in a nutshell, might not be quite new to all of you, but good to highlight about it. No, Bismillah. Look. Is there any pointer here or a sensor that it reads? I'm clicking on it. Clicking on the green, but it's not coming. Yeah, okay. So thank you. So the regular disclaimers, my other peers and colleagues have already put it, so just skip this for the sake of compliance and governance. We'll take you through some highlights about Oman Cement. We'll give you a bit of brief about the histories and current development and the forward thinking and the strategy link in order to match the 2040 vision itself. And we'll give a bit of highlight on the investment and why we should ask you to really think about making more of appeal and turnover to this specific stock, and the story to anchor potential investors being quite local, regional, and international, and give further highlights on the financial performance, historical, current, and forward projections. And hopefully my other peers will give you some projections in the forward, because we see the market needs such kind of forward-looking and estimates that can lucratively bring the community to invest. We'll highlight on a quick stand on the comparatives between us and the market and the other players, growth drivers, and we'll highlight the stories of success once it comes to projects and further developments. And then we'll bank on third parties' voice. It's not our own self speaking about our story of success. We'll hear from the market and we'll give some kind of references, and then we'll end up with a contact for your convenience and reach. Overall, Oman Cement has started in as the late Sultan, His Majesty Sultan Qaboos be peace upon him, may his soul rest in heaven, for the renaissance that he established in Oman. And this has came in the establishments in 1978. Over the almost 40 years, we have been quite in commercial operation that has never faded to supply comfort to the local market according to the available capacities, and never fading on the quality to sing a kind of a brand coming from the country, radiating to the region and elsewhere. We, as Oman Cement, started as with first line in the 1983, starting the commercial operation by established through a German technology, and added the second line in the 1990s putting another additional capacity due to the growth in the demand in the local market, and that technology being brought by the Japanese. Subsequently, due to the ever-growing demand and still not fading growth in the infrastructure, the growth in the population, and the young generations that yet still need to have residencies, commercial buildings, industrials, Oman Cement has added another line on the 2011 and upgraded that for further capacity towards 2014 to bring a total capacity of clinker production to 8.7 million. Clinker is the intermediary product, which is predominantly, I would call it around 90 to 95% of the total cement compositions. The other 5 to 7% are additives, which could be gypsums and other materials to create the cement. Oman Cement itself, as you say, listed in MSX. Market share, we are covering between 30 to 35 in total of the local domestic demand. But that is complemented by our partners and peer, Raisut Cement. And the remaining delta is still being brought to the country through the UAEs and other traders to the nation. Unfortunately, up to now, we are still a net importing nation. And that's a fact that there's an upside for any story to come, either on the growth story once it comes to expanding the capability and the capacity of the existing plant in a brownfield, or once it comes to grow in different regions in the country to suffice the demand. Oman being well poised with a nice kind of deposits of metals, minings, and quarries, which gives us a niche to really leverage on this. Overall market share, speaking about it, moved by significant corporates, and 20% of this is almost floated on the MSX. The other 80% is held by GREs, government-related entities, among which OAs and pension funds. We are fueled through the natural gas, but there is some story to tell about the green, the ESG, that we will highlight subsequently. And the Omanization, we are almost trying to catch up with the 80 as a kind of a yardstick for us, while industry requirement is 35. And that is ever with people who have been living with us in 30 and 35 years, solid cemented people with professional cadre, that we end up exporting our kind of experience to the other peers in the market, and we learn from each other. On the left-hand side, I'm speaking about the quality parameters that we never compromise whatsoever it takes. Even if it takes that we invest into further R&Ds, which we currently are on deep heat with the innovation, and we'll speak about specific products which we have launched around 2019 end, and really now is taking traction in the market by a nice appeal and appetite, and which also helps into the green emissions and the green initiatives. Oman Cement is almost the 9th or 8th in the rank globally once it comes to quality standards and API, American Petroleum Institute, once it comes to the oil well cement. I'll skip this brief because I've already spoken about it, but I'll come down to this again. On the API, we are covering almost in Oman between 95 to 98% of the market demand. And this is mainly for the oil well exploration and the cementing of the oil rigs services. And we as well export delta of this specific quantities to international, regional players, among which we have touch base to Iraq, we have sent to Libya, we've sent to Kuwait, we've sent to Qatar, we've sent even up to Venezuela, and recently to Republic of Nauru down in the Australian Ocean side. And there is some kind of knock on the door asking us to provide further capacity in order to start putting the export. That's another plan and the strategy for the forward in the growth. The story on the nutshell, on the first 3 quadrants, I've spoken about it. On the last quadrant, we are still a net importing nation. You will find me singing about it again and again. Creating such sufficiency in the local market is an evident that we would need to do it by all means. Either Oman Cement, either other potential investors, either strategic partners who can come with us, come with other players in the market to create sufficiencies. The unfortunate circumstances of a bit slow move on creating the capacities and giving that the financial meltdown 2007 landed, most of the capacity that has been created in the adjacent neighborhood country has ended up sending their overcapacity to Oman in order to really stabilize whatever the demand, because eventually they couldn't find that huge cycle of infrastructure move in the neighborhood countries, and comes to be quite competing with us on price. So the red ocean theories prevails very significant on this cement industries. Oman Cement is tactically attending this through different means, among which tightening the belt on cost optimization, but we take it to the other side of P&L optimization from top-down side. Among those initiatives, we have built the concept of growing, and we have initiated these projects down with the shareholders somewhere around 2011, an initiative with joint partners to go to the Duqm. Unfortunately, at Duqm at that time, natural gas was not there, and given that the base was coal and pit coke. This story moved to 2016, where this whole process after the final investment decision got approved has been halted due to coal being quite I would call it non-green to the environment, and being quite limited by the CZAD authorities that their infrastructure and the facilities drawn on the financing should be green. So coal being killed, then we end up swinging to natural gas, which has came to the service of abundances. Earlier, it was not available in a full scale to give a capacity of 15 to 25 years for investor to stabilize a kind of an investment in Duqm in the cement side. Duqm is very well poised once it comes to the growth and on the expansionary, and we have a story to tell towards the end of the slides. Once it comes to Oman Cement itself now, we grow from the initial side of 0.7 million ton per year on the cement to somewhere around 3.6 if you see towards current and recent time. This capacity is limited with the clinker capacity of 0.6 in the initial and now 2.6. So we have an upside. If we would like to use it and suffice the market, we need to import clinker. The current market in this year doesn't give you that privilege of go and import. Restraints on the macro global variable conditions that have landed has affected every player in the market. But Oman Cement has done over the year a prudent approach on business continuity planning by stacking inventory, which has helped into creating a sufficient buffer of cement to be sold to the local market. The story on the expansion, we speak about doubling the capacity locally in our Misfah factory, which will almost give us 15,000 metric ton per day to the market that we can deploy it once this whole commercial operation starts 2025. We have already appointed the consultants, and we have already tendered out, and we are in the last stage of the final evaluation. And hopefully before the year end, we will be able to break the ground and appoint the EPC contractor. This is the process when was spoken about limestone. Oman is well known for deposited materials like limestones, iron, clays, and other minerals as well. The process starts with the rich limestones and goes into the whole process through the grinding, and then it comes to the heating and then cooling down, and then off to either sell it in bulk. Once you see this banana bulker, because before I joined them on the Oman Cement, I was wondering why some of the trucks are having a bent back, just like banana. So I understand now it could contain also cement and maybe other kind of grains. And the bags, we are almost with the quality with no compromise on the residential, commercial, and industrial. You'll find many of young fellows and individual and families will bank on Oman Cement quality to be available and producing to meet their own demand. And we are trying to deliver our level best to match the demand in the market. Leaving the latter part about Al Burj, I'll speak about the other four products. We've spoken about oil well cement. We are well regarded in the international arena, and we are comforting, and further we are developing product on this side. Once it comes to the other major product in the market, which is called ordinary Portland cement, or you hear the team they're saying OPC. The OPC usually constitute from our kind of sales mix around 70 to 80% previously. And the others are a bit specialized product once it comes to sulfate resistance in the salted spaces, and it can reinforce the infrastructures. And the other one is also for some blistering cement. What we end up creating here, if you see the tick of the green, that's a kind of an ESG initiative and a green-friendly product. And it has landed to the market in 2019, gradually grown into almost taking a share of the total mix to 26, from almost 3 to 4%. Now our mix to the market, we are selling Al-Burj predominantly, and it has been tested and proven and delivered to the market over the last 3 years prudently. And that is one initiative that could lower the emissions, improve the margins amid the competition once it comes to the price war, and help us into delivering maximized value to the shareholders, among which even the communities and the socials. This is what we already spoken. So if I go back, I spoken about Al-Burj. I need you just to focus with me. Once we speak about Al-Burj here, was not existing 2018. We started building at 3% 2019. And here we are as of August, 26%. And hopefully this year, if we could reach a target of 30%, that will be a kind of a slam dunk for an uptick, an upside for the bottom line to be recognized and realized, hopefully. Speaking about the quantitative figures statistically, we've spoken about the clinker being quite limited to a maximum of 2.6. The delta to the cement is around 1 million. Over the past years, we have not been able to tap on reaching really around the 3 million or 2.8 or 2.9. The maximum we have reached around 2.5, 2.6 roughly, if you would call 2020, on the cement production and sale. And by the way, we have the just-in-time food to mouth, so we don't produce cement and pack it and store it, but rather than we produce to sell. And we expect, hopefully, within this whole ground of the blessing from Almighty, that we will have a 3 million, roughly around 2.8 to 3 million, if the market keeps the same momentum of uptick, to deliver this year unprecedented result, inshallah. On the governance and steer, we have the board of directors pointing from Oman Investment Authorities, along with independent directors, pension funds being quite civil services and PASIs and MODs. On the masters of the experience, most of those gentlemen here, you'll find them solidly casted, not less than 20 to 25 years of experience in the cement. Except me, I'm just a juvenile, I would call myself. I'm trying to catch up, but hopefully I will be quite another cementing guy, inshallah, to the industry to help. Or we contribute wherever we are in the country to the Vision 2040, inshallah. And that means Omanized. But we do bank on our multinational partners and colleagues in order to complement the story of growth and create the differentiation to stand out. Speaking about green again, because I will never hush to speak about green, this is one of the yardstick for us on the strategy in order really to go efficient and also to have cheaper cost once it comes to the financing and be comforting the all ticks on the ESG and SDGs. We have already started kind of a pilot, small investment into solar, and that is servicing almost the head of the administration building in the plant. And on our design, we are putting another head office with a green-friendly environment, considering these initiatives as well, to come, inshallah, on the airport heights. We have kickstart tire ship concept of alternative fuel. Alternative fuels, we brought this, what we call waste management. The country does have many of those waste, either being quite hazardous or non-hazardous, which have been dumped into the yard and has not been able to be quite even sent off border. And the tires we having plenty of millions are available under the custodianship of BA. We partner with BA and we have done the study and all the required agreement. And now we have awarded the contract to a Chinese renowned company to do this tire chip handling and add it to the CLIN in order to subside the use of natural gas. And this project, hopefully by Q4, it will be launched, adding value to the Oman Cement itself. Now, another exercise we are doing on the strategy, this is the refused municipal waste further, being plastic, being hard, being food, whatsoever, could be quite adding value to the cement factories. And this is not new. It's available in the other streams and the countries, but it needs to really deep dive testing and confirming to the specs in order to be quite used. And we are almost in the mid stage of the feasibility study. Once it comes, hopefully the target to go live with this 2024, and that's one initiative on the strategy forward. Hydrogen, we have joined the alliances as last year, and as well also we have signed a framework agreement with consultants who are also working with EDOs and the ministries, and hopefully soon we will be able to put seeds for some kind of project in the hydrogen, as Jindal has done, and we are also in the same panel with those teams. Now, we've spoken about the tire chip. I'll skip this. Workforce, we've spoken about Omanization. The split of the Omanization, we have almost 637 employees of full-time. Out of them, 75 are Omanis. The other technical, non-technical, 15 is almost in the support, and the other are hardcore technical people. And some of them, from the blue collar to the chiefs, you'll find them full cadre Omanis. And our kind of progression and succession plan is really prudently, effectively moved right, even in the recent years, which has now comforted us on the leadership side. On the investment, why should you just invest in Oman Cement? Why should you consider yourself to come and lock yourself there? There's a value that we are creating a self-sufficient system, that we have the ecosystem available with us. I'm speaking about the quarry. We have captive quarries. Mostly we have the raw material. If it is not secured, it will be a trouble. So in this cement plant here in Muscat, we have it within the parameter. The limestones of 100 years plus reserve, the QPH next to it, the same, the iron, the clay, and the gypsum is another few hundred kilometers, but also under our custody. And we are arranging for this mixes happens on the site. We have never been recording losses by Almighty Grace. Inshallah, we'll continue. And ever been green to the shareholders once it comes to the continuous stream of dividends. The average on the dividend yields we have been giving it was around 8 to 15, and over the last few years, it could go up to 30% in better time, and hopefully that we could do something coming this period. We've spoken about API, we've spoken about that we are in the middle of the country, or not purely middle, but at the north side, wherever the populous area and the demand of cement happens. And we serve almost to cover 80 to 85% of the whole population in this region. The others are complemented by the import and the other peer in the market. The green initiatives, we've highlighted about it. Brand loyalties, if you ask even a banker, would you like to build your home or even shop with another brand other than Oman Cement? A question you can ask your each fellow next to you. And I'm not speaking about other badly, but about we know the qualities. That's the other thing. We have proven that our business continuity is purely, I would call it adaptable and strictly resilient. I'll give you an example. In 2020, 2021, people end up shutting their houses or shutting their plants, not producing. COVID has almost suffocated people. We end up tactically removing people and also going by the same guidelines of the committees. We have, among those good years, 2020 and 2021 were best years of the records, and we have been delivering good results. One is based about how we have managed our crisis. The other base is about creating buffer contingencies on ground. We've spoken about clinker being quite a limiting factor, but over years, even that we have not utilized full capacities, we end up deploying this reserve on ground and using it whenever needed. So the last 2020, 2021, and even current year, this reserve, this inventory has helped. So inventory sometimes it adds values rather than our fellow accountants and brothers in the finance, they will call it trap cash. So as a matter of fact, you just save it for the hard time. On the financial highlights, these are some historical statements on the figures and some projections. I will caveat the projections would need to be quite taken in a prudent investor best hunch, but we are projecting into our best stories. The 2022, while we are projecting that 2.6 now, this has been almost, the study has been for us produced on quarter 2 mid, and this is by independent parties. Once we have asked them to create and check and balances. Now what we have showed you, it would be reaching almost the 2.8 to 3 million ton on the sales volume. On the turnover, we see that also this 2022 will be better than last year. We'll give you more highlight H1 to H1. And on the forward, once we go on the full swing, once it comes to the 2025, wherever we expect the new plant comes with a double capacity, we see almost 2.5 times growth into the level of either the turnover or the sales itself. Same story speaks here that 2025 will be an earmark for jumping the times of those multiples and the ratios, both on the profit and even on the EBITDA side. I'm just skipping these because it all speaks the same language. I'm giving you a projections which we would like to share with the community, with the investor, to understand we know how to run our business. What's our forward look? Maybe variables might act differently. Maybe other entrants, other rules comes to be quite affecting us inadvertently, but we know how to tactic once it comes. Because then, as we say in Arabic, ما حك جلدك مثل ظفرك فتولى أنت جميع أمرك. So you act like a commercial viable entity to stand out, and don't let people to come and bail you once you cry. So this is the story that we have it in Oman Cement. We continue to be quite green and profitable overall the period. And even once we speak about the new project, while we are speaking about it in the brownfield concept, we have not asked shareholders to jack even a single dollar. It has been a bankable case, even oversubscribed on the initial side by 8 times interest. And thank you to the bankers, brothers and colleagues. That's the partnership which we see. And we see that also once it comes to the harmonization on the sufficiencies ratios, among which once we start the project and go on the production subsequently, that a comfort that Oman Cement will be another good partner to whoever the stakeholder. Dividends distribution and percentage we've spoken about in the range start somewhere around 8.5, started almost in the 1994, and even heading to a peak time of 30 and 35 plus. Caveating the 2022, there was a disclosure here, I don't know why it has not come. That will be quite subject to the last end year results and the board endorsement if things moves right. And that's what we expect to uplift in the end of the year performance. This is the same parameter speaking about the year's performance. H1 to H1, if you speak about the ROE, we are still containing it within the 4, but with the results published H1 2022, this figure is almost 4.3 as of expected towards end of the year. Sorry, as of H1 2022. So you see most of those green arrows confirming the same stand. Oman Cement is still a good partner to be with, among which you to invest and put some specific liquidity to the market. The growth comparative on 2021 first half to this half of 2022 is around 60% in the comparable. So this is a story, to cut in short, that hopefully this year will be quite having a good slam dunk. I'll skip this comparatives, but we are almost the blue one comparing to the others on the profit and the comparison over the year. On the growth, many of my colleagues and presenters have already spoken about the GDPs, the population, and how we see the market moving in Oman. I'll focus on mainly the population side. The growth and GDPs is there, and the construction. On the population side, we see the trend is still a very young population in Oman in comparison to the other nation in the GCC. If you compare to the other GCC, we are still trending into growth of 3 to 4%. Further, these nations will still need to be quite having more increase into the construction development side and mega infrastructure once it comes to the economy and the government and fostering these initiatives. Cement are in the range of almost 4.2 to earlier somewhere it used to be around 6 to 7 in the start of the 2000, post the millennium. Focusing on the mega infrastructure, you will find Oman Cement almost sitting here. So you will see majority of those projects, how they are covered. So we are almost covering this circle and available to service. And if it comes to the north, you will find that Tib, the second star over here, will be able to service it from Duqm. So from here up to the market out, once it comes to the export, and we have never fading demand, knock on the door, reaching each single bodies, even the commercial team and the marketing sales bodies. We receive inquiries from Yemen, from Africa, being Somalia, being Tanzania, being Rwanda, and the Indian subcontinents, Sri Lanka, Bangladesh, and even India nowadays asking for a specific support on either raw material or clinker or even end product. But the unfortunate circumstances, we need to suffice local demand before we spring off to the international arena. This is the GDPs extracted from statistics. The same my other colleagues have already pronounced, and the same extract. The only highlight here, I would highlight that Oman population is a young population, so still the demand will be there. And this is from our extracted from third parties and also Bloomberg. And thanks also for the good researches that I find in the market about Oman Cement. Thanks for the trust that the team are having in us and also challenging us. Thanks for the analyst coverage that they are bringing, all of them. And also I extract some of those maybe in Omnivista and UCapital are here. So I thank you for whatever you are adding to the country by having independent view on the industry, independent view on the country, on the company, and having scrutinized the proposal or recommendation to the communities, being which the investors. And we'll come with the financial comparatives once, if anyone need to refer it, towards the end of the slides. And this presentation will be available on the website. On the project and development, speaking about green, I can speak about the multi-millions projects. But for me, it's not that big bright unless it goes green. We have invested over the years on these initiatives to roughly around, I would call a shying figure between 20 to 25 million riyal, in order to conform to the standards requirement. Because one major tagging or stigmatized in the mindset of the population that you find the cement industry the most heavy, I would call it carbonizing industries, the most pollutant industries. One time the government has stopped us from running the operation because the dust was quite emitting, and the neighborhood, we are in the neighborhood of almost the vicinities of residents team. Earlier, it was no one residing and coming next to us, but now, given the urban and the population growth, residents are next to us. So we invested in also pollution control, which is now even sensitively connected to the market, to the regulator and monitored. And ever since, alhamdulillah, we have been in compliance, and we are investing further on the greens, and among which we've spoken about the other products which we have brought in. Cutting story short, I've spoken about we are a net importing nation for cement. And there is always an upside for this. Not just because we are having a capacity locally demanded in market to be quite met, but also our position as a global player and a very connected, well connected to the whole sphere, being the mid. We can service the African developing nations who are knocking every now and then, asking and demanding. We can go to the Indian subcontinent, and even on the niche product, creme de la creme, you could service it to wherever it is. We've spoken about the areas we sold OWC to, even America side, even far in Africa side, and Asian and the Oceania. So the first one which we've spoken about is the brownfield construction in cement, the cement plant. This is doubling the capacity by enhancing the line number 3, which has been quite upgraded in 2014, sorry, and bringing a new line based on new technology. The other technology which we have used called bore roller mill pressing. Here we will use a kind of a vertical roller mill, which means a high stackers, and it takes the whole process on the same pipe. And it will be producing a bit of a good stand for the market that once we double the capacity, we'll be able to fight with the competitors, fight smartly, reasonably, and transparently, because we want to make things win-win for all. If people can help in coming to a term of partnership or support each other, we can create that resilient associations, which needs to be quite yet to be thought about, which has not been brought to the service yet. We spoke about potential export market. We've spoken about Bangladesh, Sri Lanka, Kenya, Mozambique, Kuwait. These are confirmed statistics for investors. Once it comes to Duqm, we've spoken about the Duqm area. This project is put on hold for a specific discussion with potential PPE side, JVs, with a conglomerate. If once we fine-tune the bits and pieces, either we go to double capacity, because initially Oman Cement put it at 5,000 metric ton, but the 10,000 with an upside to sell and export to the external sphere and the market nearby. This is also the same strong infrastructure development happens in the Duqm that can create sufficiency rather than only creating a grinding station. Grinding station, that means you just put an installed plant and buy clinker and grind it and add the additives and create the cement in order to sell it. And overall, I've just got this this morning, extracted from last day of closing trade. The price used to be hovering around the 200 bases, somewhere around 2021 or 2022. Sorry, 2021 and 2020. If you get to see on the 2021, we even created spike, and the price has been quite really trusted. Now we are standing at 3.306. But the market liquidity will need to be brought in order to create the turnover. So this is what we feel that it needs to be quite invested and thought about it. Now, thanks for the researcher and the analyst. This is extract from your capital, and I leave you to read out for those who would like to consider. And we have the disclosure here. Investor has to take a reliance on their own independent choice of investing at the right time, because those could be variable and change. And there is the upside, and this is fresh on the last results of H1 2022. Updated and published 5th of September, yesterday. I leave you to read through this. This is all available on the presentation. The statistics are published by the third parties on our even projections and conservative, I would call it, challenge on the figures. But still, I would like also you just to go through the balance sheets and those even the margin and ratios for your references if you would like to ask any question. Other than that, I will say those are the teams on ground. They are saying, thank you for your trust. With you, we grow and we bank on each other's support. Thank you. And this is our contact if you would like to have any queries, attended, a clarification or information, or even analyst coverage anytime, whom we have not touched base with either. Shukran. Hopefully no question, I think. Most of the team are comforted. Or it's lunch time. Bismillah. You? This is weird. Usually I would expect it coming from the other side.
All
Please.
right. One of your green projects caught my interest, the tire chips project.
Yeah.
You had mentioned you gave the contract to a Chinese company. Out of curiosity, I just want to know if you have any idea of how they plan to get rid of the tires.
No, that what would happen, tires are currently under the control or the custodianship of BIA. BIA have a specific checklist and framework agreement with us, and we've signed this on how the disposal would happen. The tire, what would happen with these tires? Whole tires will be shredded by BIA. That's one part of the fees that we are in the partnership. They will shred the tires to a specific diameters or length, which is, I think, if I'm not mistaken, 80 or 30 mm. And then they will come and put it to our clean site, wherever the team will insert it to the clean in order to fire it as an energy source.
Oh, okay.
An energy source. So all the tire chips will be fired. By the way, maybe I have missed out. Those cleans are in the range of between 1,200 to 1,400. In some industries, it goes to 1,600 Celsius degrees. And that is quite huge. And usually cement industries or cement plants, even if we have any Chinese friends or who have visited China, you will find them, they are robustly using it as a very aggressive waste management initiatives through those cement factories, because at these high degrees or temperature, you will find every single thing cracks. Even drugs, even government deals with this by disposing it in cement factories, but in a very controlled, I would call it, environment. So all those could be utilized. And surprisingly, we find also such initiatives we are carrying now on other people in the adjacent neighborhood, UAE, and KSA just started these initiatives. So we are catching up, not with big gap. Thank you.
Okay, thank you. Thank you, Mr.
Any other
Fatih
question?
Kalbloushi. Any further questions?
Yes, please. شيخ وراك تعطى التليفون المايك sorry.
Yes, thank you for the presentation. I'm Nishit Lakhutia from SICO Research. I have two questions. First
Sorry, you are from?
Yeah, SICO Research.
Research, okay. Yes, please.
I have two questions. One on the expansion. Do you have the gas allocated by the government for the expansion?
By almighty grace and the right prudent approach on the planning once it comes from the upstream and the regulator, MIM, Ministry of Energy and Minerals, things have been quite put in a comfort that security over the additional delta gas required is already secured.
Okay, and in terms of pricing dynamics of alternative energy, you talked about tire and RDF. How does the costing works versus gas?
See now, I would call whatever the substitute percentage in order to move away from the fossil fuel side, because you need to be quite more on the ESGs and the comfort of the green initiatives. This could be almost replacing some way. I'm starting on the tire ship side. I have not added the RDFs and others, but could be starting from the sharing from 2 to 3 to 5% and going up to the 8%. And some of those cement plants using collective approach on alternative, they could go between 20 to 30% replacement of natural gas. However, prudently to answer your question properly, seeing industries of cement using it up to 50%, myself, I have not yet seen it, but maybe Arif and my colleagues could have added. So, but have we had any kind, or is there any in existence, any plant using 50% alternatives up to that level? We have not seen yet, but with technology, with involvement of science and research, we are hopefully that we can do. Please.
Okay, and just the final on the market dynamics. I know for past 15 years, UAE cement producers have been dumping the excess capacity in Oman. It's not something new. And what kind of market share does UAE's cement and traders have, and where is the gap that you plan to bridge in terms of this expansion? And in terms of cost dynamics, given that the UAE, the fuel and transport, everything is higher, how are they able to capture this market here? So what's your view on that?
Maybe I missed out to highlight both. I'll speak about the production capacity in Oman. Collectively, there are two integrated plants in Oman. Oman Cement over here in Muscat and Raisout in the south for Raisout Cement. Raisout does have other grinding station capabilities and other integrated plant in UAE. Unfortunately, the total collective capacity from the integrated plants and the grinding stations doesn't suffice the demand. So it goes between the 55, sometimes 57, to a range of almost 60%. This is how we see it. Or sometimes it goes lower if the price competition prevails, pressing their paddles heavily. And both of us, we are complementing. We are not really taking a fight on the prices. Sometimes we try to see how we can support each other. Yes, maybe all time it was not the story. And hopefully with this kind of delta, which I will address your question, what is the deficient part? The deficient part on the 40 to 45% is still imported. but not all of them will come from UAE. Some of them comes from other countries among the clinkers, could be brought from across the ocean side and used in these grinding stations because it might be cheaper. Other nations nearby, they are using, I would call it, tick of the box or approved by regulators in these countries, different means. Coal is not approved for us to be used here. Coals in the neighborhood countries are approved to be used, and it's friendly and environmentally ticked. But in our side here, still we are very prudent, conservative once it comes to the ticking of the box of environment, so we have not moved to the coal. Coal, in the recent time, skyrocketed, which has helped us into a kind of moving to the delivery of those nice results, but not just purely coal prices as a fuel to the nearby invading parties, but because also other means of macro global effects of the Russian-Ukraine war and the transportation cost or the logistics moves and the mobilities and the long lead time to bring those raw material or even the maintenance spares. We find it even affecting some of the players in the market once they've been out of operation for a few weeks, which really later on impacted us. If you ask me, since we started up to now, what is the peak sales you have done per day? We have done it this year. During this specific circumstances, once started to March onwards. And we, as of current, still we are running above our nominal capacities on the utilized line if I compare it to the previous year. And that's why we say our results, hopefully by Almighty grace, will be a good tick for anybody to really partner.
So this cost curve has gone up. So how is the realization moving, price realization? Has it gone up quite a bit and you think it's going to go up further in the next coming quarters?
See now, price realization itself, there's two sides of it. We can play it from our side by taking advantage of the market to rise or increase the price of selling of the product. Collectively, given that we are also a GREs and we are also commercial, we have maintained the balance that we don't disrupt the market in a very disruptive manner and also in a very distressed manner because the market is already distressed by all those highly cost, variable cost drivers being quite the fuel, being quite the transportation, being unavailability of materials. So other people have ended up raising the price per metric ton between 2 to 3 riyals. We have stood solid on to continuing with the price regime since we have established it per COVID start in 2020 March. So our pricing policy have not changed, and we are still delivering the results. So if I, as a kind of a company, would like to take an advantage of the opportunity, there's a big upside, which immediately, if I go to the market, I reap a benefit of it, even if I go slow on the sold quantities. So there's a good story about the upside. Net realization positions, we are still having the, I would call it shying figure, but this shying figure giving the multiple of the volume on the turnover as of current, without the impact of the price escalation. If I compounded that, then the beauty of the story will be quite abundantly bigger. That's in a nutshell.
Okay. Thank you so much, Mr. Fatih Al-Blushi, for your time and for your responses. I'm sorry that we can't take any more questions since we're running a bit short on time. We have, can we welcome to the stage?
Thank you.
Thank you. Give Mr. Fatih Al-Blushi a round of applause, please. Can we please welcome to the stage Mr. Sulaiman Al-Ghannami, CEO of Oman Fisheries. Okay, Mr. Ghannami just needs a minute. We'll have our lunch break after Mr. Ghannami's presentation. Please give him a warm welcome to the stage.
Assalamu alaikum wa rahmatullah. Good afternoon to everybody. I'll make sure that we start lunch on time. Oman Fisheries, before we go to the details of the presentation, it went into ups and downs. We are actually now in a transformation journey, and maybe recently, many of you hear a lot of disclosures, a lot of news about Oman fisheries, and that's actually part of the transformation program. And we are hoping to improve the shareholders' value in Oman fisheries, and we bring more trust into the organization, and we are confident we are moving into the right direction. In today's presentation, we'll go into the overall industry overview, financial performance, strategic directions, and potential projects or investment that we are working on currently. So when we go into the company background, it's actually established by a royal decree number 8779. It's, as we speak, it is the largest fish company in the region by asset size, and it is one of the largest exporters of fish in the region. We are actually reaching more than 145 customers around the globe. We operate 5 processing centers across Oman, from Salalah to Al-Wusta, in Masira Island, Al-Ashkhara, and in Muscat as well. We are engaging the company is actually, it's in the fish procurement, fish processing, also trading, major activities, and the frozen fish. From an industry perspective, there is a strong growth in the national statistic, where it shows a big growth from 2014 to 2021 of more than 20%. Expected total landing to grow up into more than 1.2 million of metric ton. As we said, we export markets continues to show strong. There are difficulties as we speak today from freight, exchange rate problems, countries, availability of dollars, but still there is a strong market for fisheries. The World Bank forecasts a further 5.2% aggregate growth from 2022 to 2027. We have a very modest contribution to the GDP, but the government is working on improving the GDP contribution from the sector. Continued opportunities in aquaculture as well, and FDO, they are there from a shrimp and sea bream point of view, and we are one of their major customers, and we want to be seen as their trading arm as well of their products. The key highlights during the year, as part of the transformation, we sold Al Amin, which is our cold store, to Asyad, to ensure that we also join hand with the government and the government companies to improve the cold chain channels, and that has been a successful transaction for us. Initially, when Haytham was talking about the interest of Oman flour mills into fisheries, there is actually an international interest as well. So during the year, Gulf Japan Food Fund also through a private placement procure 31% of the company share, and now they are the major shareholder in the company. In terms of revenue performance, we are 36% better than last year, 6-month to 6-month performance. The gross profit was also shown a significant improvement. In terms of production, we started even entering into semi-value add, value add products, and we are expanding our presence in the regional market and international market as well. In terms of international trading as well, just to ensure that we also provide products to customers from other fisheries in the globe. We've started trading from Japan, from Norway recently, and we are also working with other initiatives as well. Commercial fishing stopped during the pandemic. We got the approval to start the commercial fishing again during the year. We've signed a partnership agreement with an Irish company for small pelagic with a quota of 30,000 metric ton. We've started the operation as per the disclosure as well. We've started in the third quarter of the year. In terms of fish procurement, we've actually, during the transformation, we've also went into a detailed review of what is right, what is wrong. We've sat with the fishermen, we've signed agreements with the major fishermen and the traders in the country, and that has been a successful journey as well from both sides. We are getting the right products we are looking for, and for the fishermen, they are dealing with a sustainable organization in the sector as well. In terms of the exports, it represents 88% of our products. Somebody will come and say, why 12%? I think the country has more than 130% sufficient of fish. We are there, we support the market, we go with the right products to the market, but we're trying not to compete with other players in the local market, but we have our niche market and the niche product as well. A very high level, it's been already disclosed. As I said, top line growth by 36% and the gross margin improvement by 11% as well. The bottom line, the main contributor here is coming from the sales of Al-Amin. Net realized gain on this is around 2.6 million. In terms of strategic direction, we put it in 3 pillars: increasing volumes, increasing value, and building capacity. And maybe I'll start with the middle. We're actually focusing more in bringing more value rather than a volume. And that has been as well as successful in the first 6 months. We've sold less quantities, but we've gained a better revenue, and that's where we are moving as well in terms of tuna, in terms of a value add, in terms of different species to different markets. We are targeting Japan, Korea, and some other countries with the high value items. We're targeting West Africa and Egypt for the small pelagic. It's a huge demand, and we have enough quantities as well in the country. In terms of the fresh market, we've opened new markets as well. We are in UK, in Italy, in Spain, in Ireland, and so many other countries, and we are opening more countries when it comes to fresh. And as I said, we are targeting different markets as well. In terms of increasing value, as well as I said, we're sitting down with the fishermen, trying to get the maximum. Sometimes even we get phone calls at midnight that he is upset, the factory manager is not accepting his product, but that's part of the job, and we've gained their interest as well and their confidence. In terms of building capacity, human capital is number 1. We are in a full re-evaluation of the existing capabilities. We recruited a good number of Omanis as well into this, and we are continuing in building capacity and improving the industry and bringing new technologies operated and developed by Omanis. Upgrading capacities for some plants. We are in a full evaluation, either in terms of expanding or building new factories or improving the existing ones, and we are going definitely to introduce some of the automation or semi-automation processes as well in the new factories. Digitalization, it's the game, and we have a full unit is being equipped with good calibers to ensure that we are coping with the market requirement. Reviewing, recommending, and enhancing standarding. The SOPs are one of the key areas to improve not only the financial performance of the organization, but put us in a position where seen to be an international standard organization. In terms of opportunities, as I said, we are doing a full evaluation of the existing facilities we have. We have a long-term agreement of using the lands, use-of-rock agreement with the government. It goes up to 30 years, so we are investing on those lands. And also, we are enhancing our presence in terms of commercial fishing and in terms of processing. So if we move to the commercial fishing, as we said, we've started, and we are moving ahead with the other initiatives as well. And we have quotas for small pelagic, tuna, ribbonfish, cuttlefish, and squid. And that's where, as I said, we're looking into the values more than the volumes. Coastal vessels, in discussion with FDO and the ministry to see how can we contribute and provide some of those vessels to the Omani fishermen, and to ensure that we have sufficient volumes as well coming to our factories. Modern fishing boats, this is the talk, it's been for a while, but I think it's getting to an end, and there are a lot of good examples, different countries that working on modern boats and successful, but there is a lot to be done from an infrastructure point of view, and maybe Duqm fishing port is going to be one of the key elements to move forward with this. In terms of cold chain logistics, a lot of opportunities. One of them is the RSW trucks. It's not available in Oman yet. It's there, proven in different countries, improving the quality of the fish. We might be investing on those initiatives as well. Upgrading the fish receiving practices. We've seen different countries, different experience. There is a big improvement into the current practices in Oman. We see ourselves having that mandate and that initiative to start some of those improvement. Processing centers, as I said, we might be going into new processing units or updating whatever we are having today. And species-specific production centers. We're talking to different players as well outside Oman and in Oman and different markets. Specifically, if we talk about Saudi Arabia, they have a unique requirement when it comes to what kind of products entering into the Saudi markets. So a lot of activities, and we hope we have the right capabilities, the right calibers, and the right infrastructure to move this company forward and bring more value to the shareholders. As I promised, I was quick, and any questions, I'll be happy to answer them. تفضل.
Storage, cold storage. That was the right decision, that company are growing and you're selling your main facilities of storage. As a businessman, we see we need that storage for your increasing of the capacity and selling more. You're coming up from your main business, which was good storage system. Can you please elaborate on that?
Our main business is not the storage. Our main business is to process and to sell. And considering the investment in the cold stores available in the country and the other service providers, and based on the analysis done, that was the best move for the current situation the company is operating.
And where we can see you have a good license, good setups, where we can see the next your market share, or where your growth?
As I said, we are working in different initiatives to increase our market share. And talking about the license, we've started utilizing those licenses, and a few vessels already in operation.
Thanks. Better you give something in figures. Just
tell me, what is the figure you're looking for?
And increasing your market share. Where? Give us better figures. Where
we are targeting 16 to 20% market share. We are today around 11.
Okay, good.
Till Q2 results, Oman Fisheries has 9.4 million retail loss. Any plan to write off that number?
On the accumulative loss?
Accumulated loss, yes.
Not currently. We are evaluating the performance of the company, and based on the results going forward, a decision is going to be, or a recommendation is going to be passed to the board and to the shareholders.
To write off that number?
If as I said, we are evaluating the performance of the company, And based on that performance, the recommendation will go either to keep it and it will be improved, or to be written off. So the decision is not been discussed yet. I guess if I give you a background, if you talk October last year, there was a discussion about improving, because it was the share capital was eroded to more than 65%, and there was a discussion on writing off some of those losses. However, with all the initiatives that took place and new investors injected capital, this is not in the current discussion. زين وقت الغداء. Thank you. Thank you very much.